Good morning. Good morning. Good morning. Welcome. Please, can we move forward a bit, please? Please. Let's just move forward a bit. Thank you. Okay. Yes. Welcome to Commercial Partners H2 2024 Economic Outlook. My name is Olamide Adigun, and I head the Brand and Marketing Communications Desk at Commercial Partners. We have over 100 guests online, and we wouldn't want to waste time. We would like to stick to time. And so I am your MC for the day. I hope that I entertain you well enough. It's a serious conversation, and we already have experts here with us who would be sharing insights, and we look forward to having that session. We already have the event guide, and if you look through it, you'd see that the next thing on the agenda is the opening remarks by Mr. Tosin Oshikoya. Now, Mr. Tosin Oshikoya is the CEO, Commercial Partners Asset Management. That's one of the arms of Commercial Partners Group. He's also the co-managing partner at Commercial Partners. Ladies and gentlemen, please let's welcome Mr. Tosin Oshikoya.
Thank you very much, Olamide. Good morning, everyone. Good morning. You're welcome to Commercial Partners Annual Conference. Good morning, ladies and gentlemen, our distinguished guests, our esteemed clients, those who have taken various chances and confidence in us since we started this business. I'd like to say welcome to you all. In the last 15 to 18 months, everybody would agree with me that Nigeria has set unprecedented records. Records that we are not proud of, unfortunately. Debt levels have been in areas where we've never experienced before. Soaring inflation, interest rates. Some of our clients today are comfortable taking money in mid-30s, late 20s. And I wonder what kind of business are they doing at mid-30s? A client that we raised commercial papers for took money at mid-30s. And I begin to ask myself, how sustainable is that? Guess what? The client is going to pass that cost on to end users, the common man on the streets. We are in uncharted territories. And it's unfortunate that in Nigeria, especially for some of us that have been actively involved on social media, we've heard so many nice things about Nigeria, that we are well blessed and vast in many areas. We're celebrated in many areas. As a people, that has not translated in any way to the benefits of this country. Why is that? So at Commercial Partners, we do not just narrate all these problems, all these challenges. We want to be part, actively involved in preferring solutions and implementing it. There's some people out there, all they do is they narrate the problems. They are good at narrating the problems why the new regime is not doing well. But you need to do beyond that. How can you be part of the solution and not just preferring solution? Be actively involved in executing, either at corporate level or at your individual or household level. Today, it's been increasingly difficult for companies to operate in this country. For those with dreams, to set up new businesses. And everybody here would agree with me that the foundations of any growing economy rests on SMEs. How can you set up a business when you go to the providers of capital, and the providers of capital are saying to you that you need to bring your mother's head before they can even give you money at what? At mid-30s. And the last segment of people that we should all be concerned about, guess what the last segment of people is? An average man on the street fighting for daily survival. That particular segment is a ticking bomb. A classic example is what happened in Kenya. I need not say more. So today, it is our responsibility at Commercial Partners to gather together a panel of renowned financial and economic experts to not only talk about it, because we are not here for storytelling, because we've had so many stories, whether through print media, social media, even a blind man on the street knows that there's a famine in the land. We need to start crafting, forging plans, executable plans that will move us ahead and forge or write a new narrative for this country. And as we go ahead and proceed into this discourse this morning, please, I'm charging and imploring every one of us to pay attention. Let us leave this place not the same way we came, but living with insights, living with new ideas, feeling upbeat, pumped up. And in our own different corners, let us begin to take responsibility to see how we can move this country forward. And as we do that, I'm hoping that we would take this responsibility seriously. You know what they say, that the price of greatness is responsibility. Thank you and good morning.
Thank you. A round of applause for Tosin, please. Thank you. So we'll move on to the next agenda. And I'd like to introduce the head of investment research, Dr. Ifeanyi Uba. Okay. Yes.
Thank you very much. Thank you for coming, everyone. Good afternoon. Standing on existing protocol that Tira has already established, I want to go straight to the event. Chess versus checkers, a very dynamic team. That's at the end of the team, I hope I'll be able to explain adequately. Strategic depth versus tactical simplicity in the Nigerian financial market. Nigerian financial market, yes, but as we all know as market participants, there is an interrelationship between the global market and the financial market. We cannot necessarily scrutinize the financial market without talking about key drivers and trade-offs that happen in the economics. So, before we begin, let me tell a story about a trade-off. There is a particular bus route that was kind of tricky, that this driver carries passengers, his students, to school every day. Today, the bus route was having issues, so he had to take a more dangerous route. In this dangerous route, there was rain, there was panic, and he was facing issues. His brake had failures. On the left side, he was falling to death. And straight ahead, he had to choose to ride to the gate and halt, saving the children. Obviously, at that point, it was an easy decision. So he decided to move straight to the gate until he found out that as he was approaching the gate, he saw a figure, somebody. Now he had a choice to make. Not hit the gate and neglect the children, or ride straight to the gate and save the children. He already made up his mind, just like traders pulling the trigger and hearing new information. He went straight to the gate, and yes, the children were saved. When the family came around, they asked, "Oh, where's the driver? Let's thank him for saving our children." And he was like, "The driver is still in shock. He cannot be spoken to for now." They're like, "Oh, obviously, he just had an accident. He's in shock." No, they said, "You don't understand. The child at the gate was the son of the driver." In this life, we analyze economic data in passivity, forgetting that there is a relationship between inflation and debt rate. And anytime the CBN increases interest rates, it means cost of borrowing goes up, which means unemployment is factored in. In this presentation, I'll try and move from hegemonies to peripheral and try and take you through the interworkings of the financial market. Thank you. Before we start, to make it as interactive as possible, I would like everybody to bring out their phones and scan. We have a couple of questions that, at the closing remark, we want to see. Some of the questions have definite answers and some of them don't. Uniquely, today that we picked to present our report, we all have our MPC Council meeting to check whether they are going to raise rates or not. Also today, we also found out that SEC also approved the ETF for Ethereum, which makes today kind of a very crucial and vital day. So I implore everybody to just scan and answer the questions. Okay. Thank you. So I proceed. So we can't really talk about the market without talking about the US economy. The US economy has been at the peak. And one thing that's happened during the first half that has been notable, have been seeing quality stocks like Nvidia and the AI crave moving the market. We have seen the S&P 500 being dominated by market movers. And this has trickled down in how the whole world is expecting performance from the stock market in terms of AI. Although right now, the market movers are Nvidia and the likes that have the cheap manufacturing, we still feel that this AI trend is going to trickle down from top to the bottom in such a way that we'll see more bottom level companies improve on their strategy and operationality in order to adapt AI to their next steps. The truth about it is that the United States economy is actually grappling with inflation, and we have gotten some new hints of progress. So that's why our expectations are for one rate cut. Previously, the market priced in a lot of rate cuts within the first half of the year, but these particular expectations were dispelled given market data as the US tried to achieve its target of 2% inflation and just oppose that target with economic growth. But given that the US economy is thinking about themselves, their strategies trickle down to what we see in the Nigerian economy and the world at large, as their hawkish stance would also affect the emerging countries in terms of how they enter the debt market. Moving forward, we also saw across the Atlantic that the monetary policy by the European Central Bank has started taking some favorable outcome, as we have seen that they had a holding, tightening, and holding regime, as we have seen that inflation has started dissipating, pushing that we could see some accelerated growth. Moving to the SSA, we know that we have been having some issues with the Ghana bonds where we have some restructuring in principle, and we also have Nigeria having some accelerated debt issues with conversations on how are they going to tap the Eurobond market. We expect that the interest rates will come down and they would enter the Euro market at a slightly better region, but if they don't, they would have to enter it at elevated rates. And the concept around SSA countries borders around their currency, because what we have noticed is that aside from Nigeria, Ghana, with other countries, including likes of Argentina, have been having problems with the strength of the dollar, which brings into question the presence of BRICS. BRICS is now a conversation that is more pertinent, particularly due to what has been happening to Saudi Arabia oil deal, as they don't have to start selling their oil solely in dollar, which has brought into question the hegemony position of dollar. Although we don't see the dollar losing the hegemony spot as for now, but current activities that was exposed in our report shows that we've seen central banks start looking at another alternative, or started holding up more gold reserves to look for alternatives to this particular hegemony. So one thing we know is that the dollar is really strong. And a strong dollar means weaker currencies for other emerging countries. And this has trickled down, not just for Nigeria, it's a problem we are facing in Ghana. And now the conversation against the dollar has started with the BRICS economy, led by China and Saudi Arabia. This is a formidable trade alliance that can actually bring some sort of sustainable challenge to what we have in the dollar hegemony. But for now, the dollar is still buoyant and strong. But it's something we need to look at, particularly in terms of how people trade and how things move on post the Ukraine crisis and COVID, because lots of things have happened. We also notice increased attention with gold, and as we have chatted up, we've noticed that central banks said increasing their net open position for gold in order to solidify. For commodities, we noticed that so many factors led to the rise of cocoa, and the cocoa shortages is still a pertinent problem because of different agricultural factors. Drilling down to the Nigerian economy, we understand that we are grappling with a debt problem, and our projections for economic growth is around 3.2. Our projections for economic growth is around 3.2. Given other factors that I'll explain. So moving to the monetary policy, monetary policy estimates projects for a moderate estimation around 1,600. We also have some projections around inflation that was elaborated in our report. We expect that this recent minimum wage increase is expected to have some sort of inflation shock as public and private sector grapple to meet the minimum wage and increases cost of production. One thing we understand about our inflation is that it's unlike every other one. It's a structural problem, because we understand that food at farm gates is relatively stable, but food at marketplace is different. So we still notice that Nigeria could face accelerated food inflation problems, given that that contributes a large proportion of our inflation rate. We expect that adding a cost push and pressure in terms of increase in wage would add some added pressure into the inflation. That's why we are putting our inflation target slightly very high, around 40%. Moving forward to the NGX, to wrap up, we had the NGX index performing the most and the banking index performing the least. This is no surprise given the recapitalization policy of the CBN. At first, a prior expectation going into the NGX for the beginning of the year was that the banking sector would strive based on the recapitalization principle. This held water for the first phase, but when we noticed that the CBN tweaked some particular requirements in their recapitalization policy, the market reacted and we saw the stocks perform a little bit slightly below expectation. We still expect some rebound, as our outlook is still optimistic, and we see that there's still room for investment in the power sector. We tried to make this presentation as brief and concise, pushing all our projections out so that you can have time to scrutinize our report. Our report is very extensive, and the team that put it together had put a lot of time to it. So to conclude, I would try and explain the theme of checks and checkers, tactical depth and tactical simplicity. To be honest, the brainchild of this team was to use Dangote as an example. But we all know what Dangote has been saying in the news. So we're like, oh, people are running, but Dangote is investing. So, when the world throws you a curveball, you're supposed to use it and make lemons. So the truth about it is that chess is an important concept. And one thing about chess is that the first move is very interesting because when you make the first move, you have a billion possibilities. And even when you've made an error all over the way, you don't just call it quits. There's still lots of ways to rectify your situation. And just like Theo has rightly said, we don't just want to talk about numbers. We want to look for a way to rectify our situation. So we are going to charge our panelists with these informations and try and see whether we can come up with thoughtful actions. Thank you very much.
Thank you. A round of applause for Dr. Oba, please. Well, I'm not a chess player. I prefer checkers. No, draft, because my dad plays draft a lot. And he's a champion at draft. So I'll stick with draft. Thank you, Dr. Oba. Moving on very quickly, we would like to introduce the moderator for the first panel session. And that's Mr. Ladi Williams. Please, a round of applause for Mr. Ladi Williams. If you don't know, I want to assume that everybody knows Mr. Ladi. He's the anchor, business anchor, Channels TV. Welcome.
Thank you so much, Lamide, and thank you to the Comercio team for having me today. Thank you all for joining us here and believing in me to actually moderate this panel. And the good thing about this panel today, I've had a couple of them on my business shows before, so it's more like an extension of one of the shows at this time, like Business Morning and Business Incorporated. And first person I'll be introducing for this panel discussion, we're going to be talking about we're taking stock now for the global economy, and definitely it makes sense to actually take stock because that way you can be more strategic, in forecasting your future and navigating it. I'm going to be calling on first now, her name is Chinwe Egwem. She's a chief economist and head economic research at Coronation Merchant Bank. Let's put our hands together and welcome Chinwe. Also, we have Mr. Nnamdi Iwizu, who's the CEO, Commercial Partners Trading. He's going to be joining us right here. And last but not least, I'm sure we all recognize his hair at this point. We have Ugo Dre Obichukwu, founder, Nairametrics. Thank you so much for being here. It's definitely going to be a packed panel. We have the minds right here. I've had all of them on the show before, and I can tell you that they give us fantastic content right there on our shows. So now we're going to be kicking off with the global economy. At this point, we keep talking about the dollar. We've talked about the dollar so much. I feel like we should be printing dollars at some point in Nigeria with the amount of times we talked about the dollar. But we're going to be talking about the dollar today. So I'm going to start with maybe I'll do a ladies first at this time. So definitely we've seen the dollar looking at the DXY at this point. I believe it started the first half of 2024 at about 100 points. Now it's about 103 points, got to a high of 104 points. That's talking about the DXY. So we've seen the dollar actually do pretty well against some other basket of currencies, at this time. But now we're having talks about the strength, of the dollar. Talk to me about what you're seeing, right now when it comes to, the dollar in terms of trade and actually financial markets, how it's doing. Does it still have that strength that it's known for, or is it starting to wane somehow?
First of all, thank you so much for having me. I would say that from my perspective, I would give mixed views, right? The strength of the dollar is also very much determined by the kind of decisions that we see with the monetary policy committees, the Federal Open Market Committee, right? And also, one would need to monitor what's going on with the ECB and the Bank of England, to a large extent, what is going on with the central bank in China as well. So this would give you a sense of the movements with the USD against other currencies within that basket. But I think what I would like to speak on or highlight would really be around again, one, that strength of the dollar, and then the expectation of liquidity into Nigeria's market or other African markets. There's this expectation that there would be some level of capital inflow when a trimming or easing occurs with the benchmark policy rate, right? And when you look at the three markets that we do monitor, that is the ECB, that's the FOMC, and then BOE. So we monitor this like hawks. You'd find that there are now conversations around trimming, right, with regards to the benchmark rate. And one thing I find when I'm speaking with investors or having meetings with different boards is that there's this, celebratory posture around expectations with regards to capital inflow. But I think it's worth highlighting that there are other macroeconomic fundamentals one needs to look at for specific markets. So if you're looking at Nigeria, Ghana, Kenya, Zambia, these economic fundamentals do matter. So things like what's going on with inflation, the currency volatility within the economy, and then with Nigeria, where we have the Monetary Policy Committee and their inflation targeting posture that we've seen throughout this year so far. I think, yeah, there should be a meeting going on right now, but yeah. Yeah, so very looking forward to seeing what they do. But these are all dynamics that help with that informing the decision around capital flow, So it's not just focusing on the rates decisions or the monetary policy decisions. And of course, the fiscal side also matters a whole lot. So yeah, let me stop there for now.
Right. All right, let me come to Nnamdi at this point. So definitely, we've seen the rate hikes in the U.S. We've seen how that has played into the strength of the dollar when they started raising rates, the U.S. Fed. But now everyone's looking at, when's the Fed going to cut rates? Where we have September right now on the cards, but who knows if that's going to change, at some point. But how do you see cuts, at this time? When we get the first cut in the U.S., how do you see this impacting markets in the U.S. and somewhat playing into Nigeria?
Okay, thanks for the question. So, first of all, we tend to watch the Fed dot plot where they basically show or try to indicate how many cuts we're going to have for the year. Initially, people expected there are going to be 3 cuts, and then now it's looking like we're going to have 2 or 1. We know what high interest rates basically, the US more or less leads the world in terms of markets. And we've seen the effect of high rates from the US, range of 5 to about 5.25 or to 5.25 to 5.5. And that has translated across the global economy. We've seen other countries also raise rates. The Bank of England, we've seen European Central Bank, and then you come to Africa, almost every country has been impacted by the higher rates. So what basically happens is US investors tend to do what they call a carry trade. They take funds from the US and invest in other markets. The higher the rates in the US, the higher they need to get from other countries that they invest in. So if previously rates were thereabout and they're coming to, say, invest in Nigeria, then you could say, well, maybe a 15% works. But when your rates move to 5.25 in the US, they naturally expect to have much higher rates, and that's what we've seen. So if you start to see a drop in the rates, the question will be how big a drop. If it's a 0.25, you might not have that much of an effect globally. But as they start to have, more frequent cuts, and it depends on where they finally settle, then, what you should most probably see would be flows going from the US back into the emerging market once again, because we know that we've seen a lot of funds go from emerging markets to the US, a lot of outflows, naturally because they're getting much better rates. If they can get 5% or higher or thereabouts, or if you're looking at 10-year rates about 4.2, 4.3, they would rather be there than coming to other countries. I mean, the carry is not as lucrative as when the rates are lower. So what would happen is people start to look for other alternatives, other options. And we believe we'll start to see flows going into, back into emerging markets. I mean, if you look at the Institute for International Finance, they predicted that you have about 900 billion flows in 2024 going into emerging markets. I assume that was done, or that estimate was made when they expected about 3 flows. So 3 cuts. So you might not have as much as that. But the more cuts we see, the more flows we're going to see, and which means most likely going to see currencies across the world start to strengthen. And then you see stock markets, because foreign investors will start to come into the equities market, they'll go into the fixed income market. I mean, if you think about it, Nigerian treasury bills effective yields today is about 29%. So when they start to cut their rates, it depends on what our own central MPC does. If they keep rates where they are for a while to start to attract flows, then you see a lot of people moving from the US, right, and other developed economies that start to cut rates and start to go into emerging markets like Nigeria, Kenya, Ghana, and the likes. Thank you.
So when we get that first rate cut, is it enter every market at this point?
Well, it depends on cost of funds in those markets. I mean, if you're buying T-bills at 29% and funding rate is 37%, locally, you might want to wait a bit to start to see the signals. If you have, cheap cost of funds are fantastic. I mean, go in and start to load up and wait for all the foreign investors, to start to pile in. And it typically starts with the portfolio investors. They come in first. And then after that, you start to see the FDIs come in after them. So what you have to do is watch out for when you start to see size coming in from the FPIs. Then you know that there's a good time to go in, because the, long money people will start to come in after that. And they tend to, stay for a longer time with what they've bought.
All right, let me come to we'll go Dre with this one now. We did get the capital importation data for the first quarter of 2024, and definitely we did see FPIs outweigh FDIs. And definitely we're talking about inflows at this time, but it was, if we're looking at the bright side, we did see good inflow. How are you seeing it?
Thanks, Ladi. I don't know what you mean by bright side, though. Yes, we saw, was it $3.9 billion, I think, the first quarter of 2024, which was quite pleasing. I think the whole of last year, we probably did sub $4 billion in capital importation. But Ladi, the point is, capital importation in Nigeria has always been FPI. So let's not fool ourselves. It's always been FPI historically. 80-90% of our entire capital importation has been FPI. I think the glory days of FDIs was probably before, 2013, 12, thereabout. That's when we used to see sizable FDI inflows. But since we had that major oil crash of 2014, it's always been FPIs. And it's not like it's a bad thing. I think if you go and look at historical data, you find out that whenever we have sizable FPI inflows, it tends to correlate with when we have stable exchange rates. So which is what we're all looking for, isn't it? Stable exchange, not even stable exchange, but at least it's something of a semblance of a stronger naira. You know what I mean? So that we can all pay for our school fees abroad. Because almost everybody now has a family abroad. Anyway, so so it's a good thing. If you go to 2018-19, when we had very sizable FPIs, I think we had about 20 or so $billion or thereabout, stable exchange rate. Go back to 2014 as well, same thing. And then when FPI starts to drop, you start to see exchange rate depreciation. Fact, that's what tends to happen. And so that was why I think it was, I don't know whether it was on your show or one of the other shows that I said, if we don't see, I feel like if we don't get up to $10 billion in by the first half of this year, we're going to have exchange rate pressure. No two ways about it. And I think we're already seeing that happening, even though we did see some kind of strengthening over the last few days. And also important that we're seeing significant inflows, especially from maybe the likes of World Bank. Now, back to the FPI data. Good that we've seen $3.9 billion. Let's see what happens in the second quarter. I think the data will be out anytime soon. My concern, however, still remains the cost of attracting those kind of inflows. It's not cheap at all. And we've been here before. We did it in 2018. I think it was one of Emefiele's policies. I think we called it sachet banking back then. Yeah, basically, just, you know what it means, sachet now. So we called it sachet banking then. So it was basically attracting expensive inflows at a very high rate, high cost. And that's what is happening now. So I think Namdi just mentioned 29% treasury bills, OMO bills, similar as well. And in exchange for that, you're getting dollars in. So it's usually a very temporary solution to exchange rate stability. What needs to happen in terms of FX inflows for Nigeria is for us to get our crude oil output increased, and let's see a lot more petrodollars come in. We need to see more traditional flows of FX into the country. Only then can you now start to unlock FDIs and all the other ones that we tend to want, even though these days it's as if our own local FDIs are now being chased away. Anyway, that's a story for another day.
Lani, I want to add something to what Ugo said. Yeah, so another data set that is also monitored is also the inflow that we see with the NAFEM window, right? So for every time the MPC has sat, at least this year, watch it, for the next 5 to 7 days, you see like a spike from the FPI inflow, their contribution to the total FX inflow into that market, and then it now begins to dwindle. So we've seen an interesting dance with FPIs and non-bank corporates for a while. So again, they're sitting right now, so we expect to see that kind of activity.
Right, and we did see a strengthening yesterday at the close. That's for NAFEM. So we might see another one today after the decision. But I'm still looking at the global markets, at this point. And you did mention the petrodollar. And we've seen the issue with Saudi Arabia. We hear that they're not renewing that agreement that they had there with the US, on pricing oil with the dollar. So looking at what's going on, right now, and we've seen BRICS and conversations about a BRICS currency, is it happening fast enough? This de-dollarization, this great de-dollarization that we talk about.
Well, firstly, how does this thing concern you people anyway? You're not in BRICS now.
We might
even the mint that they created some time ago, I think is now meat. They removed the N out of it. Anyways, because I get this question a lot, that's why. And I keep asking them, why are you worried about BRICS? It's still years and years away. But I guess maybe for those who may not understand what Ladi said. So essentially, I think in the 70s, the Americans got into some deal with Saudi Arabia. And every oil that America buys from Saudi is priced in dollars. And that's why oil is priced in dollars today. Anyways, because I guess people have always asked, why is even oil priced in dollars? That's why. And Saudi is the largest crude oil exporter. And so for that reason, oil is priced. And of course, in exchange, Saudi gets security from the US and all of that. Now, what is happening is because you now have, a lot of geopolitical interest across the world, and a lot of countries are now stronger than they were. This is no longer the 70s. We're now in, the 2020s. And so, you also have younger crop of leaders that are well-educated and well-versed. So I think the mindset is beginning to shift. And the BRICS, which is Brazil, Russia, India, China, and South Africa, are saying, you know what, we contribute maybe sub 20% of global trade. So why don't we come together as a bloc and wield a lot more influence? Of course, this is all behind the scene pushed by China and Russia. Make no mistakes about it. Of course, South Africa, who who ideologically has a very different view from the West. A lot of people don't know that. As much as South Africa is a darling of the West, ideologically or politically, they don't tend to agree, right? Yeah, they don't. So because of the years of apartheid. And so they now want to move, they're now saying let them come together and then form their own regional currency and all that. So it's a good idea. The point is just so that we can have less reliance on the dollar as the currency of trade globally. The immediate impact I see, and from a lot of papers that I've also read, is diverse. I mean, it could be anything really. Nobody really knows. Some have said it could immediately trigger currency volatility because then there's a role the dollar plays, whether you like it or not. The dollar is an interchangeable currency. So whether you want to do business with China, or you want to do business with India, you want to do business with Ghana or South America or whatever country, and BRICS is just 4 countries of how many countries, right? So you still need to have an interchangeable currency. And so where you now say you want to eliminate the dollar, then what is going to be that currency and how volatile would that be with your own currency? And then for countries that export a lot to the West, right? Maybe like Nigeria or some other emerging market countries, what does it mean if your dollars or the money you're expecting is not in dollars, it's in another currency? That also has its own effect. And then, of course, what of your own imports as well? So where do you import mostly from? Do you import mostly from Western countries? If you do, then you really don't need to worry about the BRICS. You don't really be too much of a concern. But if you import mostly from the BRICS, then that matters. And of course, there's also all sorts of geopolitical issues around it, which I think is the underpinning thing here. Because if you side with the BRICS, then that has effect, a wide range effect on a whole lot of other things, from military backing to even backing states and to being able to even acquire technology and all sorts of things. And so that's really what it is. But for Nigeria, I don't think it's so much. Our own issue is zero. See, this place, it's not BRICS. We need to find ways to increase productivity in our own country and forget about these countries that you're seeing all have solid productivity, whether it's Russia, even Russia that's just fighting Ukraine war is even more productive than we are. Whether it's Brazil, whether it's South Africa, they're very productive countries. So what we should be worried about is how to increase our productivity, right? And I don't know which country can help us get there, whether it's us internally that needs to do it, but I think that should really be the focus. And yes, BRICS is an issue because of the way capital flows around across the world, but I don't think it's an imminent risk for us in Nigeria.
All right, thank you so much for that. Definitely, it's just that this particular panel session is focusing on the global issues at this point. The next one will definitely focus on Nigeria. So this one, we're keeping it global, at this point. Let me come to Nnamdi now. I'm definitely talking about, the dollar actually losing that status, at some point. Who knows when that's going to happen? But let's just imagine that it actually starts to begin. How do you see this impacting the global FX market? Because we know that's a huge market at this point.
Yeah. So, I mean, if you start to see the BRICS succeed, even though Ugo said we should ignore them, it's going to be, the effect will be far-reaching, right? First of all, what it means is that the US loses its global police, global control of the economy status, for starters. I mean, even the ability to impose sanctions on countries, would dwindle, because what tends to happen now is they just slam some economic sanctions on you, stop people, because the fact that your global trade is with the dollar means it goes through the US system, right? So if they cut you off, what that means is basically they're taking you off from that global payment system largely, right? So that, first of all, reduces their influence. Then with the weaker dollar, you start to most probably have higher inflation in the US because their cost of imports would rise, right? But for other countries, a lot of countries currently have US debt, right? So, I mean, Nigeria and co, dollar-denominated debt. So what that means is that if those currencies start to strengthen against the dollar, then you start to have less inflationary pressures for other countries. I mean, You look at Nigeria as an example, we know that one of the reasons why we have huge inflation is because we've seen the currency go from about 500 to about 1,005, 1,006, which has largely, impacted on our inflation. So inflationary pressures will reduce for quite a number of countries. And you're looking at the cost of U.S. debt, managing U.S. debt will reduce. Then for some countries also, the ability to export, right? Because people will tend to gravitate towards those countries that have stronger economies, stronger currencies that now more or less would start to become the new US. And so for those countries, things will start to look rosier. And then now depends on who aligns with the BRICS and who decides they want to try and stay and support the US, as an example. So world trade would change. Inflation for a lot of countries will change. Debt repayment will become easier for quite a lot of countries, right? Like I said, dollar value goes down. So if you look at Nigeria debt and they're looking at what it is in Naira terms, there's been a huge jump. And once again, because you're looking at the move in the currency, and it's not just Nigeria, look at Ghana, Ethiopia, when you look at their numbers in their local currencies, you would see a huge jump in their numbers. And that's largely because you have the strengthening of the US dollars with the high rates and co. So if you had whatever happens when the US currency was strengthening, you start to see the reverse if the currency starts to weaken, starts to lose relevance. And also you might have a lot more insecurity, however, because if the US loses that global police role, question now becomes who takes over. And that would now impact on, what happens with the various countries. And who knows, that might negatively affect some countries. So you have the good sides, and you also have, the bad side, pros and the cons. So it now depends on how, like I said, who you move with. Most of these countries, China and co, strong economy and co, but they don't tend to get involved in military assistance for most countries, right? They tend to stay on their own. Same with the other BRICS members, India. Russia does get involved a bit, but you don't see that happening with the rest of the BRICS, right? So people gravitate towards Russia. Will you start to change your policies in line with what Russia would want the global economy to look like? So far-reaching consequences, basically.
Right, and definitely as you were talking there, I started to imagine China being the global police. How would that play out? But definitely, we'll see. But Tog, you did mention debt there, and I'll come to Chinwe now. Debt is a major issue right now for major African economies. We've seen what's happened with Ghana with their Eurobond. We also see what's happening with Ethiopia. And we got our Q1 debt for Q1, 121 trillion naira. And that's definitely a sum. And when you try to look at development and compare it to debt, you see that development is always lagging behind, most of this debt. So talk to me about, take us through what happened with Ghana, with their Eurobond, and what we can learn from that.
Okay, thank you for that. And just to highlight the figure that you just shared now for Nigeria, I'm just aligning with what was said, that FX depreciation did play a key role to that. But with Ghana, we all know what happened, high debt levels, right? There's one indicator that I'm always getting attacked when I bring that indicator up, but because I'm an economist, is one that remains potent to me, and that is debt to GDP levels. They were incredibly high. Of course, debt to revenue as well. We saw the economy also suffer from FX depreciation. That's an economy that's also very heavily reliant on specific commodities, just like Nigeria is with regards to oil. Their commodities are cocoa and gold. I don't know if I'm being too harsh if I say fiscal mismanagement, but then that now, it's a trickle-down effect from the high debt levels that I did mention. And the economy also suffered from global macroeconomic shocks, So these are, I would say, core macro issues that Ghana did face. Very high inflation levels, similar to what we're seeing with Nigeria's inflation figures. But don't quote me. The inflation outlook that we do have for Nigeria right now shows that we're about to near a peak level before seeing tiny dips, very tiny dips. The year would end with figures that are slightly above 30% based on my current base case scenario. But I'm just trying to create that visual picture of the similarities between Nigeria and Ghana. What lessons could be learned? The first one is really around just that fiscal discipline. That's really the first and core thing. Driving down inflation figures, which in my opinion is not solely on the monetary side. I feel like when we speak on combating rising inflation and we're speaking just on monetary, it's a bit lopsided. So there has to be a lot of effort as well from the fiscal authorities for us to see inflation levels come down, because it's not just demand pull, which is what monetary fights. It's also cost push, which the fiscal side has the ability to fight. Exchange rates, we've been talking about exchange rates. So that is also a component as well. But I think just in a nutshell, to answer your question very quickly, I would say is really that fiscal first discipline, being innovative. I mentioned that Ghana is also heavily dependent on specific commodities. So diversification is very much important to be able to boost revenue levels. We've been talking about FX. We've been talking about FPIs. We've mentioned FDIs. Namdi mentioned exports, but in another context. But that is also a space I feel that needs to be tapped into. Of course, we need to formalize the informal to really maximize that aspect of FX sourcing through non-oil exports. I also believe that the diaspora community is also an area to tap into. Of course, when you speak with them, or some of the surveys that we've had to, run when trying to build products that will be attractive to them, there are complaints around, again, the macroeconomic fundamentals that will cause them to want to, transmit their funds down to the Nigerian economy. So there are different FX sourcing channels that also need to be explored. And diversification is really the anthem that needs to be played over and over again for us to get there. So, yeah.
All right, thank you for that. And all right.
Sorry, if I just add a little bit to what Chima said, debt isn't bad. So a lot of businesses survive on debt leverage. The problem you have in Ghana and also maybe with Nigeria would be what you do with that debt. So if the debt goes into helping production, which would help you export, then it's fantastic. But when it goes into building roads, for instance, that go to nowhere, or maybe you have situations where you're borrowing to pay salaries, and you're maybe issuing 10-year bonds, 20-year bonds, so you can pay salaries or social intervention, that doesn't help with production. So what would happen is that you're paying interest for 20 years on monies that you've used to pay someone's salary for today, right? And then you ask yourself, how does that benefit the economy as a whole? So what we need to do would be to try and channel the borrowings into production generating activities. So I always, when I go on Ahmadu Bello Way in VI and you see that sign, Sukuk built this road, at least it tells you, well, good roads would help, so you can see where that's going into. If there was a way we could track and say, look, Nigeria borrowed or Ghana borrowed $1 billion, and this is where the $1 billion went into, and this is how it has affected production. If we get those kind of indices, right, the kind of data, then people start to track what you're doing with the funds you're borrowing. It starts to put pressure on the people utilizing the funds. And then we can also ensure that production increases. So that way you get to export, you get foreign currency to pay back your foreign debt. But if you're just using it to converting to naira to pay local salaries, debts, and co, that doesn't generate anything. You still need to, you're still stuck with your limited sources of FX to pay for the increasing and ballooning debt that you have.
Thank you for that. And definitely, when you look at the leadership in Nigeria, and you look at all the borrowings from the past leaderships, and you see that that's passed on. That just keeps getting passed on, and the next government has to deal with it. And I wish there was a way those past leaderships could actually pay some of those debt. Maybe, the leadership will take it easy when it comes to, taking and racking up debt. But let me come to you now, Ugodre, and definitely, Chinwe did mention that inflation would peak in Nigeria, at some point. But I keep trying to imagine, anybody here remembers what stable prices feel like in this country? By a show of hands. Do you remember anybody? No? Yeah, same here. I thought I was the only one. But definitely, Ugodre, looking at the situation in sub-Saharan Africa, debt is a major issue, right now. I'd like you to add to what, they've said, and how Africa can actually solve this debt. Before we get that kiss of debt, I'm sure you've heard about that term.
Well, I think, apart from doing the hard stuff, typically how Africa has always solved that problem is begging. We'll go and do a usual beggy, beg for forgiveness and come with all sorts of reasons why, the debt should be forgiven, and all that. But on a more serious note, I think not really much to add from what Chinwe basically said. And the key thing from what she mentioned is just fiscal discipline. I think that's what a lot of African countries have lacked. And case in point, Nigeria, I think I've often mentioned that one of the major reasons why we're even having the exchange rate problem, I think a lot of people forget that, it's not really that prevalent in the public space, is fiscal deficits, the size of our fiscal deficits. So long as you continue to run large fiscal deficits, your exchange rate can't be stable. It's not possible. And if you want your exchange rate to be stable, then you sacrifice high interest rates. This is how these things work, right? So where you don't have any plans to, sort of reduce that fiscal deficits that we're having, then it's like a spiral, and that's what's happening in most African countries. Now, juxtapose it with the fact that the same African countries, especially sub-Saharan African countries, rely a lot on commodity export, to, in a way, balance their budgets. And you also don't have any control over commodity export, especially the pricing, because the value in commodity exports is actually what they use those commodities to produce. And they produce those things, and then we end up buying them here anyways, at a much higher cost. So I think that is a lot of fiscal discipline, which starts with a lot of in-house claims. So African leaders need to first of all understand that they are in poor countries, so they should live like poor leaders, right? I think optics is very, very important. Very important, because that sends a signal to...
What does a poor leader look like?
A poor leader looks like, I don't know if you've seen, it's not far-fetched. Look at the Ricky, which is Sunak, what's his name? As rich, he's a very stupendously rich guy. But if you didn't know his background and you see that guy, you just think that you can actually walk past him and you think he's just an ordinary Indian man. Seriously. But you can't walk past an ordinary Niger senator. You will know that a senator delay you. You know what I mean? Do you understand? So it's all, so it comes with a lot of humility. It comes with a lot of, because when if you're a CEO of an organization and you're trying to, organization that is bleeding revenue and, employees are getting fired and is going through restructuring, a lot of people like to see CEOs that are also similar to their experience. So you don't expect an organization that is cutting money to be, the CEO to be flying private jets or to start driving expensive cars or start allocating all sorts of, that's not how it works. And I think for me, on that scale, African leaders need to start to think that way. And then I think a lot of focus need to also be on trying to stimulate a lot of local production and growth locally, whether it's through investing in education or healthcare or whatever, but there must be deliberate attempts to have a roadmap towards reducing that fiscal deficit. There is none now, and that is why, sorry, I was a little worried as well when we came up with the extra budgetary expenses, right? Yeah, because that, again, as much as it's basically backed by new taxes, it's likely also going to be funded by some kind of debt. And so that now continues to build on and on. So that's the problem African countries face. Whether it's in Ghana, whether it's in Nigeria, whether it's in Gabon, whether it's in Kenya, it's the same problem. And solving these things is not easy. That's why you're seeing what's happening in Kenya. As much as Ruto is actually sincerely trying to get the economy going, it's not easy driving policies because you face different kind of headwinds, right? The ones you can control and the ones that are spiritual, all sorts.
But you did mention this is an issue with Africa, at this point. Do you think there's a problem Africa coming together can actually solve?
Well, it depends on what you mean. Who's coming together? Is it the creditors coming together, African creditors coming together?
African leaders,
the
Africa as a continent, saying, you know what, we have a debt problem.
Yeah.
Let's see how we can solve this thing together.
Oh, I've not been doing that. They've been coming together. If you've been following the African Union, at the end of, before those, there are photo ops.
Seriously.
I'm serious. They discuss these things all the time. They've talked about higher cost of borrowing, especially for emerging markets. They've talked about the terms of the borrowing. Why do you think the Ghanaians, basically went for this haircut? It's been a lot of discussions around trying to get a better deal for Africa. There's been discussions about it, but usually the pushback as well from these guys is, okay, fine, what are you doing in your own country to instill fiscal discipline? So that's really the trade-off. And then how are you also able to elect leaders that can also instill fiscal discipline? So it's usually back and forth around that. And so at the end of the day, it typically boils down to geopolitical issues. Are you supporting China or are you supporting us? And that now depends how these deals get done.
That way Africa gets divided.
Exactly. And then we come back to the same issues. But I think by and large, whether you look at Kenya or Nigeria or South Africa or any of these countries, it's a very similar problem. It's a problem for sub-Saharan Africa. Even in North Africa, Egypt also had the same problems, just that they have close proximity to the Middle East. So, and then they're also a very geopolitically important country. So their issues tend to get solved first or quicker before it comes to us. But it has to start internally, Ladi. Don't expect them to come and help you.
All right, thank you so much for that one. But I'm looking at the first half of 2024 and zeroing in on the currencies, the top currencies. We did see the Naira, the Zambian Kwacha, and the Ghana CD. They didn't do too well in the first half of 2024. But we see Kenya. Kenya is not looking so bad. The Kenyan shilling. Talk to me, Chinwe. What's happening with the Kenyan shilling? Why is it strong?
Well, I think one would have to take a look at maybe the kind of policies that were set by the Kenyan government, and not just with this administration. Kenya has been seen as a nice poster child, at least up until the past few weeks, right? Given all the unrest that we've been watching from a distance. But there are specific policies, I would say, that not just current but past administrations within that economy have been able to drive and push forward. And just piggybacking on what Ugo said, I don't think that we lack the ideas, or we know what to do. I think it's implementation willpower. That's the issue, right? Across different African economies. Now with Kenya, there are specific sectors that they've focused on, which helps to boost economic growth, which has helped to drive economic diversification. We all know about technology. They've been big on technology. They've been able to also transmit that focus or deliberate intent with technology into just the fiscal side of things for the economy, and even with their tax collection. It's heavily enhanced with digital techniques or mechanisms, right? That's for Kenya. Another sector I feel that Kenya has really thrived in is agriculture. And with agric, it's not just the way it currently is being handled here in Nigeria, which is from in my opinion, subsistence level. Is mechanized, is agrotech, is like the whole value chain, like they're looking into different aspects of agriculture. I also think that Kenya, to an extent, I don't want to sing too much praises for them, but to an extent have, in terms of just discipline amongst leaders, I think they've been able to push that forward a bit more than specific economies like ours. For me, it really is just the policy, from the policy point of view, those things have helped to drive things like inflation. Those things have helped to drive the attractiveness of their economy, the ease of doing business. I think that they have healthy scores when it comes to that. You speak to different investors, even my interactions with stakeholders across platforms that I'm affiliated with. You have conversations, and when you're talking about Africa, it's Kenya first. I was recently in Switzerland, and it was just Kenya. I'm like, how about Nigeria? Hello, yeah, but like, it's Kenya first, because even national security, we are also struggling with that. So they're just different moving parts that I understand the renewed hope agenda, and I've gone through each one of the pillars within that, and it's very exciting. But if we're able to achieve the things that are set in that agenda, I feel like we would be able to move the needle, and to a large extent, localizing the kind of successes that Kenya has been able to achieve.
Very interesting. Thank you for that. But I'll come to you now, Nnamdi. I'm seeing, how well the Kenyan shilling has performed in the first half of 2024. But looking at what we're seeing now with the pushback on the tax plans, in Kenya, would you say going into in H2, do you think Kenya is still a buy, at this point?
Well, I think a lot depends on if the president is still able to push through the reforms that, we're working on right now. We've seen quite a bit of pushback with riots and go around increasing taxes. And prior to that, even when you had that pushback and they had to pull back on the new tax introduction, we saw, I think, was a downgrade by one of the rating agencies, right? Or putting them on the watch, because that was supposed to bring in a significant amount of revenue, I think about $2 billion equivalent or so. So a lot depends on how much confidence you can instill with the people. You've talked about, Ugo talked about poor leaders. And one of the issues we've had in Kenya, for instance, is that you have members of the National Assembly flaunting their wealth on social media whilst you're imposing new taxes on the people. And those are the kind of things they talk about. If you go to developed countries, not as if those leaders are not well off or wealthy, but because you're serving people, you tend to downplay, how wealthy you are, because you don't want people getting the wrong idea. So the president is appointing new cabinet members. I think he's appointed about 11, and out of 11, I think 6 are old cabinet members. So people have to look at how those 6 performed before he dissolved the entire cabinet and see if they were performers, so that instills confidence in the people once again. See, the other 5 that they appointed were not, apparently are not the usual political people, but seem to be more professionals. So it'd be good to see how well they perform, and then now look at the remaining appointments that will come along and see how much confidence, they will instill in the populace and how you're able to drive through your reforms. You need to show people that as a government, you're also trying to reduce expenses, you're trying to put the right people there, you're coming up with the right reforms and so that your people would understand and they also, go with you. If you go to certain countries, if you go to Rwanda, for instance, everybody speaks well about the president. From the cab driver to the waiter to every single person seems to have bought into the story. I mean, yes, they have a key man risk, but everybody has bought into the Rwanda story. So even when things are tough, they still believe that that president means well for them. So you need to try and have that happen in Kenya, and then I would say, yes, go ahead and buy Kenya. But if not, you start to see funds go back out, foreign investors will stop coming in because they'll suddenly say, look, these people are going to struggle again, they can't push their reforms through, and the currency will start to weaken all over again.
Thank you for that and painting that picture. I'll come to you now, Ugodre. So definitely we know Warren Buffett said, buy when the market is fearful and sell when the market is greedy. So looking at these countries, at this point in Africa, which one do you consider extreme fear, and which one is just regular fear that you could just buy into?
Yeah.
Mic check.
Be careful when you follow Warren Buffett doctrines. Those of us who followed it in 20, when was that crash again? 8, 9, we have not recovered till today. Anyways, I think that for me, as much as it's been very gloomy for sub-Saharan Africa, I think that I would always buy Nigeria. I think that's for sure. There's just so much opportunities locally that you just can't comprehend. It's just so much. So I think that would always be my first call. And then beyond Nigeria, I think Ghana also has a very good story. They're going through a bit of a patch at the moment, but I think watch out for Ghana. Let's remember that a lot of the African countries are currently on the low. And so if you have an investment mind, you'd always know that it's always better to go in, when it's down than at the top. Of course, the risk is whether we're actually at the bottom or whether we're still going further down. And in Nigeria's case, I guess you would say, hey, look, we don't know where the bottom is. But then when you look at what's happening in the equities market, what's happening in the fixed income market, there are people clean out in those markets. I guess maybe Main Street is what's suffering, but people are clean out. So yes, so there's still a major play for sub-Saharan Africa. But more importantly, and as someone who is always for portfolio diversification, Ladi, anyone here who maybe is managing a portfolio, who has his portfolio being managed, always important to make sure that you have a very good mix of FX in your portfolio, FX assets, FX-related assets. Very important, because that just helps hedge against a lot of this risk that you can't see. You can even do all your postulation as Ifeanyi just did now with all the analysis and all that, and then one politician will just come and just say something. The entire assumption, the entire assumption will just scatter. So you gotta have very good hedges across. But Ladi, please buy Africa. Don't jackpot.
Buy Africa. There you have it. Thank you for that. But definitely, looking at the way things are at this point, we're all trying to find out what's going to happen in this second half. We're already getting a taste, of some of what's to come, at this point. But now they say the stock market is the barometer of the economy. We've heard that a couple of times. And looking at the NGX, we've seen the NGX cross levels we've never seen before, even though the macros are still looking quite bad. So talk to me about what you're seeing, for these companies listed on the NGX in the second half. What are you expecting for earnings at this point?
Well, I think, well, first of all, the stock market's supposed to be an indication of the economy. I think in Nigeria it seems to be. I'm telling you because, I sat down with Dr. Oba and we're looking at how some certain indexes have performed and looking at how industrial index has performed and co. And it was unbelievable. And I said to him, wait, industrial index, I think about 100% or something like that. And I was saying, well, they are suffering when you look at FX, and we've seen them, a lot of them declaring huge losses. We've seen a lot. So how is it that they are still performing well when we've seen those industries folding up, leaving Nigeria, or showing big losses from FX? So I think for the manufacturing sector, for instance, things are still going to be a bit tough until we can get stability in the currency. So for me, it's not necessarily about the currency strengthening, but it's about currency being stable. And that is what would help you, even if you're trying to bring in flows into the country. If I know that I come in at 1,005 and in 2 years it's going to be 1,008, right? I can plan and know what kind of returns I'm looking at. Same thing with the companies here. If they want to, they're manufacturing, they need to import raw materials. A lot of them have dollar-denominated loans. If they have a bit of certainty as to where the currency will be, it helps them with pricing their goods and co, right? So with that, I still see them, struggling a little bit. I don't want to imagine what would happen if they were to fully remove fuel subsidy. It would be more of a nightmare for them. Purchasing power of a lot of people have reduced. The banks have been able to find their way around currency depreciation, and yet they still make a killing to the point where they're now going to be taxed for their excessive profits. So I still think the banks should do relatively well. And then you just have to most probably try and look for those little wins. We've seen a company like UCAP, move up about 40% over the last few days. So I would say people would have to look for those little wins and go. Definitely don't expect the market to do as well as it did in the first half of the year or what it's done over the last year, right? But I still think we're going to see the index moving up from now till end of the year. Right.
And if the index were to actually be sensitive to all the issues we see right now, what do you think the index would really be at this point?
I'd expect it to go down 10, 15%, if it were sensitive to what people are experiencing in the country and the economy as at today.
Gujay, what do you think? The all-share index, if we're sensitive to the issues, at this time, because we know it's supposed to be the barometer of the economy, that's the stock market.
But it's not. So why, you're trying to, anyway, I think that the stock market has never been a barometer for the wider economy. But there's something that is done though. It's typically been ahead, at least to an extent. It's sort of been ahead of the curve in terms of predicting where things would be. So at the moment, it appears to be ahead again. And if you look at the drivers of the current appreciation, stock market appreciation, you would see the same pattern. So it's not appreciating because there are underlying fundamentals that are driving it, which is maybe companies dishing out impressive profits. Nigerians don't care about those profits, or at least investors don't seem to care about profits a lot or dividend. But what is driving it is one, I think earlier in the year, a lot of the gains you're seeing now was actually first quarter gains. So people basically repricing Nigerian equities dollar-wise, because if you look at their value now versus maybe 2 years ago, they were highly undervalued, so they had to reprice them. Just imagine if maybe GT Bank was still 20 naira or Access Bank was still 8 naira. Come on, it's just not possible, right? So that was what drove that first. And of course, across the entire sector. And then now you're also seeing revaluation gains of banks that have also sort of supported that valuation that you're seeing. And then now you're also seeing a lot of liquidity coming in because of the public offers. So again, looking into the future, you're basically saying, okay, the stock market is assuming that going forward, there's always, the financial services sector is like going to drive things or drive the economy. So people are obviously taking positions. But on the main street itself, it's clear. If you look at the fundamentals of the companies that are listed, it's all in red, right? Even though, Ladi, if you look closer at their numbers, in terms of their operational profit, they're not really doing that badly, because what they've basically all done is just to reprice their products. They've all changed prices. So the reason why they're all experiencing the losses you're seeing today is because of the FX adjustments across. So whether it's MTN, whether it's Airtel, if you go and look at their EBITDA numbers, not doing that badly, considering the sort of challenges that we had. So yes, NGX, it's a barometer, but more like in the future. So we're not like a Yankee, America.
Not like America. Yeah. Exactly. So definitely a very interesting one. And I've been watching the market for a while now, and I remember we actually tagged the rally. I think we tagged it Tinubu, at some point, when the new leadership got in and we saw that massive rally and the market. But at this point, we have comments from those watching us online. At this point, we're going to be taking some of those questions now. And I'm going to start with one from Jason Ormo. I'm going to come to Chinwe with this one. And he's asking for opinions on the recent macroeconomic policies at this point. Yeah,
okay, I think I ran through my view on at least the policy rate. I did say that the approach, I understand the approach, it is necessary, but it's not sufficient. It's not enough to pull down inflation. I also understand how that approach is being used to attract effects into the market, which is essential. But as we've all said on this panel, it is not sustainable. It's hot money, right? So I'm always very careful when I'm giving my views on macroeconomic policies. Now, I would also say that economic diversification is something I know that's being keenly looked at. A lot of stakeholder engagements have happened to really soak in or absorb the views from the key players within specific industries that are being considered. But for me, I feel like it's been a bit sluggish, right? And it will be interesting, or it will be nice to see some kind of movement with specific sectors that we see as key drivers or green shoots. And those green shoots, again, agriculture. I don't like how it's been performing over the past 6 quarters. It's not been doing well. But yeah, so agriculture, and then not just agriculture as a core, but looking through the value chain, which requires you to look at storage, what we call transport and storage in the nomenclature of the national accounts. So that's logistics, transportation as well. So for me, I think I'm going to close on this particular point by saying that cohesion is required. An example, the Ministry of Transportation or the key players in the transport sector segment with regards to policy creation and implementation need to work hand in glove with agriculture. We have output from the north or the middle belt coming all the way to the south, where the markets are. There's an impact or implication on food rate inflation, which has been the key driver of the headline inflation, right? You run surveys, you have engagements, and you find that for perishables, at least 50% of tomatoes, for example, get rotten before they come here. That impacts the pricing. So yeah, I think I've spoken on 2 things. So two macroeconomic indicators that I've touched would be GDP, inflation, To an extent, I spoke on the exchange rate. The borrowing costs, we understand that the posture right now for the Monetary Policy Committee is that of inflation targeting as opposed to growth orientation. So we are keen to see when that tilt would take place or shift would take place, because it is really putting pressure on borrowing costs. And if we're saying that we do care about the SME segment, or we understand that the SME is the engine of the economy, then at some point we need to also start looking at giving some level of respite, because I can tell you that expansion is a struggle right now, talk less of growth when it comes to small businesses.
Thank you for that, Chinwe. And you did mention agriculture there. I remember many years ago when I was in secondary school, they'll say, I think I got an A in agriculture. They say, name the problems of agriculture. Lack of storage facilities, lack of potable roads. And it's quite incredible, the problems are still here. Wow. Anyway, let's see how we can get some questions now from the audience at this point. I'm sure you all have questions for this incredible panel right here. You can indicate with a show of hands if you want to ask a question. Anyone? Okay. So when you want to ask a question, you can just put your hands up. Okay, I see hands now. Okay, how do we get a mic to one of them? So you can introduce yourself and you can ask your question.
Thank you for the program. My name is Joseph Abiodioni. Mine is not a question, but it's a comment. We are talking about stability of our currency and our price. I think that the solution, everybody knows the solution. The solution is for us to increase our productivity, one. And the second thing, we should instill discipline by all our leaders. It's not everything that we need to go for loan. It's not every loan that we need to collect. We need to cut down our loan. Thank you.
Thank you for that.
My name is Aditoba Adiemi, and the question is a personal one for me. Seizing the opportunity of people that know these things here. I have a lot of Forex expenses coming up, money I have to spend in dollars. And so when I was invited, I intentionally came so that I can, so I can ask, what am I supposed to do? Am I supposed to buy at these prices? Am I supposed to wait? Are there ways I can hedge? I'm confused. So if you can just give me an idea what I'm looking at. Thank you.
Thank you so much for that question. A very personal one, and I actually feel that question. Who would like to take it first?
I think all of us can speak to it, but what I'll do is I'll just share internal projections with you. Now, I've stopped projecting absolute figures for the exchange rate, and I've had to shift into scenario-based analysis. But the current range that we do have now, some may consider it wide, is about 1350 to 1600 over the next 3 months, right? Again, there are things that influence the movement of that. And when I say this, it's because if I draw a chart for you, you see interesting movements and spikes. But I do expect it to sit within that range. We did speak earlier on about the decision that we're waiting on. I don't know if it's happened. Deborah, has it happened? Okay. The decision that we're waiting on. Not yet. Okay, cool. The decision that we're waiting on and how that influences liquidity, FX liquidity into the market. So when that happens, we see some kind of movement, not just in the NAFEM window, but also the parallel market. And of course, the gap between the parallel market and the NAFEM is minimal compared to what we've seen in the past. So I don't know, I hope that helps a bit with regards to your planning, what you're gonna do if you're gonna purchase right now or if you're gonna wait a bit, but that is just a 3-month projection horizon. We're gonna let my—
All right, Nabdi. Let's have you.
Well, when I'm not sure, what I tend to tell people is to do a split. Buy some now and wait and see how the market plays out. I typically say, look, maybe buy 50% now and then wait and see how market turns out. It's very difficult to predict because you have a lot of moving parts right now. But I would always say take a little bit. So if market does move against you, you know that, well, at least you reduced your loss. If the Naira strengthens, you know that, well, you didn't lose so much from buying everything at the same time. And also you can, after this, also meet with some of our commercial partners, advisors, who can also sit down with you and map out a plan for you and advise you on how best to go about this. Thanks.
So that sounds like some kind of dollar cost averaging at this point.
Somewhat. Something like that.
Something like that.
Something like that, yeah.
All right, let's have.
Okay, I think my message for you and several other people like you, and even me, who who have dollar cost, is please, if you have dollar cost, what are you doing in Nigeria? You can't be in Nigeria earning in Naira and then spending dollars. Except you're in Nigeria earning dollars and spending dollars, which is bliss, trust me, because Nigeria is too sweet. If you're earning dollars, you don't want to be anywhere else because you want to be here, because everything is just cheap if you're earning dollars. So I think the message for me is you have to find a way of earning dollars. It's okay to have, a mix of maybe buy dollars and all that, but man, you're just going to keep chasing shadows. You're having a headache every day. Because what will happen is that you'll be checking rates every day, you're going online, you're calling people, waiting with the rate today. That's just what's going to keep happening. So you've just got to find a way. I don't know how. I guess commercial partners can tell you how to earn it. But you got to find a way to earn dollars. Even if it means that meets 20, 30, 25%, 40% of your cost, I think it just helps. And I think that's what a lot of people need to start doing. You just can't expect that you're here earning Naira and you have foreign currency obligations and you think the government is supposed to, one way or the other, make sure that the exchange rate is stable, magically stable for you to meet that. It's not going to happen because that's the pressure that keeps keeping the exchange rate weakening. Anyway, so I think that's just what I would say. Find a way to earn dollars. Thank you.
Thank you for that, Mugodre. But for me personally, I've cut my demand for dollars, at this point. I'm just,
Your clothes don't say so.
Please.
I know sometimes, but there's some things I still demand some little dollars for. But this has been very interesting. I want to thank you all for being on this incredible panel. I think we still have a question. All right, please.
Good morning, my name is Mr. Frederick. Especially on the monetary macroeconomic policy, I want to ask a very strange question this morning. We are aware about the fiscal deficit in the economy, which has been enumerated in our panelist discussions. And presently, the MPC is raising rates. And like what you mentioned, the debt borrowing cost is so high. So why is the monetary policy aspect of the economy and the fiscal aspect, they are not synergizing to see how to stimulate the economy? Because it's still being predicted now, I think the MPC might be meeting today, that rates might still go up maybe by 100 basis points with their, so that's just my question, please. Thank you.
Thank you for that question. Ugojo, you want to lead with that?
Well, we've spoken a lot about synergizing, and it's just that word just seems like it appears maybe they should be doing the same thing. We have a coordinating minister of the economy who ability to make sure that there's some kind of policy convergence. But I think ultimately, the monetary policy would always be a step ahead of fiscal policy. That's just natural. What we have, some of us have been asking for from the fiscal side is trying to address the issues that contribute to high interest rates, which is what monetary policy is trying to address, such as maybe insecurity, infrastructure deficit, all those things that add up to inflation, and then even fiscal deficits, and that's basically some of the things that we're saying there should be some kind of synergy. But my brother, sometimes we ask for too many things, and they always tell you, be careful what you wish for. So we've been asking for, the fiscals to come up to the table. They've come up to the table with tax on windfall. Everybody's not complaining. We don't know what else is going to come up, because at the end of the day, part of trying to close that fiscal deficit gap would have to be some form of increase in taxation. And so you're seeing a lot of work around tax reforms. The Thai Oyedele committee is working around the clock on that. I think they pushed out some things some weeks ago. So I think that's part of what we're going to see happen. It's slower than we expected, because some of these things should have probably happened last year, to be honest. Because if it had happened last year, I think the CBN would be in a better position today. But it's beginning to happen now. Let's just see how it pans out by the end of the year.
Thank you for that. Very tough battle the MPC have to fight there.
Yeah, I just wanted to add to what he said, and just highlight that this administration, or in the past few years, we've seen better coordination or cohesion with the monetary and fiscal side. As he did say, fiscal is a bit medium to long term in terms of feeling the impact. And he did highlight the committee as well. I'm on that committee, and there are 2 other members in that committee in this room. We've been working super hard to try to ensure that the fiscal arm of the government becomes as effective as it should be, to have that cohesion with the monetary policy side of things as well.
Now, do you want to chip in?
I mean, I think they've largely covered it. I mean, it would be beautiful to see fiscal side and monetary policy work together. We should note that the monetary side, they tend to be independent. That's the way it should be. The fiscal side have to consider other things. You have to consider politics. You have to consider the people, reaction of the people. I mean, they talk about planning protest against hardship and hunger and stuff like that going on. So when you're coming up with fiscal policies, they need to think about the social side of things, and think about the political side of things and all other things you put together. But for monetary policy, they are independent. They just focus on what we need to do to move. So I mean, if rates go from 20 to 35%, monetary policy doesn't sit down to say, people are going to protest because we've done this. No, they judge themselves with the fact that we expect inflation to come down. That's done. But when you go to the fiscal side and you say we're going to tax people on WhatsApp calls, for instance, right? You can imagine what's going to happen. We've had cases where they've talked about Lagos taxing people on borehole ownership. They've been talked about taxing people on generators. That's all part of increasing their tax, revenue. But the flip side, it will be what would happen and the social unrest and co. So it basically makes the, fiscal policy move a little bit slower than the monetary policy side. But then again, we need to see them show us their plan and come up with, if it's medium term, long term, let's see where you're going to. Show us the roadmap and show us how we're going to get there, so that people start to believe that they know what they're doing, and people buy into the Nigerian story, and then, you start to see a bit of progress.
Very delicate.
Just to quickly add something I forgot, sir. I think you said Mr. Femio. So one of the other things that you notice on the fiscal side when you start to see convergence, and it's happening already, look at the external reserves. Okay, so it's beginning to rise. That is part of the action of the fiscal side, whether it's through borrowing, even though it's through World Bank loans and some of those things, but that's still part of the fiscal coming on the table. And then when you start to see crude oil production start to increase, those are immediate short-term measures that you see that is happening. And that's why I said it probably should have happened last year, but it's happening already. So that is a synergy that you should keep tracking. And if that synergy continues to improve, then I think you start to see a lot of this hawkish monetary policy start to sort of turn dovish. Thank you.
Thank you for that, Mugodre. And definitely, I guess consensus is we're going to get a hike today. That's for sure.
I didn't say that.
2 p.m., right? We'll find out though. 2 p.m. So, but thank you all so much for listening to this incredible panel. Thank you, Chinwe Grim, Chief Economist and Head Economic Research, Coronation Merchant Bank. Nnamdi Wizu, CEO, Commercial Partners Trading. And thank you, Ugodre Obichukwu, founder, Nairametrics. Thank you all for listening. Bye-bye.
Okay, so we have about 10 minutes for a tea break, just right outside the door, please. 10 minutes. problem. I was hoping that the session, is it possible to wrap it up before? Is it possible to wrap it up in what, 5 minutes?
Okay, why are you giving us less time?
Because you said you were
It's okay. To be honest, I have to go. I have to go back. Why are you
okay, I'm sorry. Please, can we have everyone back in, please? Please, can we have everyone back in? Please, can we have everybody back in, please? You can bring your food in, please. Let's have everyone back in, please. I've done that and then is it conversation? Everybody's back in. Just one. So we need to give microphones on the chairs too. Can we get microphones on the chair? I think that they should. Maybe it's on the seat. No, I dropped it back here now. I gave somebody back the microphone. Yeah. I dropped it back too. Yeah, but I gave it. Sister Mary. Okay. Sorry. Let's put it on the seat, please. Sorry. Please, can we sit? The second panel conversation is about to start. Hold on, sir. Four. So two panel here, one moderator here. How many mics do you have? Okay. So moderating the... Can we have that reduced, please? Okay. The second panel conversation is just about to start. And I'd like to introduce Mrs. Wolake, who will be anchoring the next session. A round of applause, please.
Thank you very much, Olamide. Hello, ladies and gentlemen. I see people pretty much got all they needed to hear from the first session, which is why they've left the room. But I think we still have a bit we need to discuss. I'm Rolake Akinkubefelani, and I'll be moderating the session. I'd like to call on our panelists today, starting with the CEO of the Nigeria Economic Summit Group, Mr. Tayo Adeloju. A round of applause for him as he comes up. Then I will also be calling Professor Philip Olashikbo Alege, Professor of Economics at Covenant University and President of the Nigeria Association of Macroeconomic Modelers. It's quite an extensive term. We also have Mr. Tokwe Fasua, Special Advisor on Economic Affairs to the President in the Office of the Vice President. Please keep clapping. And last but by no means least, we have Mr. Farouk Oreagba, the CEO of N Clearing Limited. Okay, we need democracy on this panel. Why is that clap louder for him than everybody else? We'll keep it professional. I know why you're all clapping. So the discussion for this panel is meant to look at the macroeconomic dynamics in Nigeria, economic challenges, talk about the outlook, potentially prefer some solutions for the government going forward. But actually, the government is on this panel. But we'll try and make it as tough as we can for him. So I guess looking at the discussion from the first panel, we talked about the global economic context, global economic trends, trends around capital markets, around debt, talked about the exchange rate. There was even a bit of a segue into policy coordination and cohesion. And actually, that would be the first note I'd like to touch on. And I'd also like to use the very pertinent and current example of the Finance Bill amendment, because that's a topic that's on everybody's lips right now. And for a lot of people that we've been talking to, I also work in a space where we have a lot of investors who are interested in the Nigerian market. And so the question is helping us understand maybe the rationale behind the policy, I think, which to the layman, we understand what the government was trying to do, but also helping us understand what the outlook is for policy coordination and cohesion between monetary and fiscal policy, and how those two can work more in sync together. I think that's the first question I'll throw out to Mr. Fasua, the Special Advisor to the President on Economic Affairs. So over to you, sir. Thank you.
Oh, it's working. Thank you very much. Good morning, Rolake. Good morning, everyone. It's good to be here, and thanks to Commercio Partners for the invite. So I reckon the question is about fiscal and monetary policy coordination. That's is an age-long question, something that we've been working on. I think in this administration, things seem to be coming together somehow because we have a cohesive team, at least for once. But the two issues are different. I think we need to look at that question in the context of our current economic realities and how things are panning out. And essentially because this government, this administration, was very ambitious, still very ambitious, especially regarding to the reforms that we have carried out. Mr. President stated on May 29, 2023, subsidy is gone because, of course, there was no provision for subsidy. However, a couple of days after, about a week or two, we also did the Naira floating thing, which is another very major, significant reform. It was hailed as at that time, but some of those who hailed it, I see they started to backtrack after a while, But if we look at the realities of those, and in fact, let me quickly say that the third reform, which I don't hear people talk about much, but it's also a very major reform, is the treatment of the ways and means. I would argue this with Tayo. I argued with Tayo some time back, but I think I'm probably the only one that's talking about it. We discovered about the ways and means advances of about 30 trillion by the previous government. However, according to the Minister of Finance, who sees the books on a daily basis, we paid out about 7.3 trillion out of that now, according to the minister, and I have every reason to believe that. However, what I see from that is this, whereas the ways and means was an official advancement to the previous government, I tend to also look at it that a lot of that came in post-2020, from the year 2020 and onward to about 2023 when the new government took over and decided that, we're not going to do this anymore. Whatever we're going to get, we should be within the structured approvals and so on. I believe so far that the new central bank has not given out such kind of monies, and rather they would raise money through treasury bills and what have you, which is good, So, but it's important to note that the idea behind central bank breaking the bank, issuing money and all of that from that COVID time is an international issue. I looked at the book of the US Fed, and there was a spike in 2020, and it's been climbing up until recently. The $6 trillion that the US spent on COVID, at least accounted for, most of that is in the book of the Fed. I looked at the book of the Bank of England, and the 410 billion pounds spent is actually warehoused in the Bank of England. So perhaps that's what happened, but those countries are a little bit more experienced than we are, okay, in terms of managing such level of crisis. Because for me, COVID is not even a once-in-a-century thing. It's actually a once-in-the-world kind of thing, because there's never been a time when a globalized world was shut down, the entire economy. Shut down, no shipping, no transport, no production, no nothing. Everybody sit at home. And we also should understand that, we're just a 63 years old country, right? People say a lot of things, but sometimes I say we should take it easy on ourselves. We still probably have a bit more time to correct our mistakes, but are we documenting the mistakes? If you're going to correct a mistake, you have to document, you have to read history. One of the biggest disservices to the study of economics recently is that we have been bleaching out economic history, not even writing our own or taking our own economic history as serious as we should. And of course, like they say, if you ignore history, you're going to be repeating it over and over and over again, 63 years, including, maybe in time I'll be able to talk about the issue of debt and what have you. So when you look at monetary policy, we're back to orthodoxy. One of the things you want to say if you want to rile up Mr. Cardoso, is to try and get central bank to do fiscal policy. He doesn't want to hear that willy-nilly, which is okay. And the central bank has actually handed off quite a number of the intervention, if not all. And recently I saw, I think it was Mr. Dangote saying that, or him and some of his group saying that maybe they should bring back the anchor borrowers program. Now the thing about anchor borrower program is that as wasteful, quote unquote, as it is, the last time I checked on FAO website, Nigeria is now listed as the biggest rice producing country in Africa. Now, so when you intervene at that level, there is going to be a bit of remnant, some sort of thing that keeps the economy going. So whereas it's not to be encouraged. So that's that as far as that's concerned. On fiscal side, I probably will admit that, yes, there's a lot of things we could do a lot better. One of the things I will note, so that I can let other people speak, is that Nigeria has perhaps the lowest budget in the world. So when I was listening to Godre was speaking about, fiscal discipline, which is good. But the point is this, let's first understand that the budget for Nigeria this year is about $15 billion. As a matter of fact, 2 years ago, our budget was $30 billion. Are we getting fewer? No, we're not. We're talking about maybe $70 per person budgeted for agric, for roads, for health, for education, for everything. The last time I did an analysis in 2018, 2019, when I was contesting for president of this same country, not my local government association or something, I found out that we had the second lowest budget just above DR Congo. And in DR Congo, the whole eastern DR Congo is under rebel control. So it could be understood why they don't have a serious budget. South Africa's budget is an average $150 billion. So now 10 times our budget. So we have a bigger problem, which perhaps only the government may not be able to solve. We have to change our thinking in terms of when we look at it. Of course, there's profligacy sometimes. I would actually argue that we're a little bit more frugal in this government, but of course, optics matter. 100% optics matter. So I want to throw that back to people like Ugo, people like my friend Mohammed, who's laughing at me. What are we doing with $15 billion when Angola is budgeting $50 billion? When Algeria is budgeting close to $100 billion and so on. So when you look at it, so we're doing well on the monetary side, but on the fiscal, a lot more could be achieved. Thank you very much.
Okay, thank you very much. I mean, you said quite a lot there. And I think the question I was really trying to get to was around the cohesion between the two policies, but I'll come back and I'll ask you specific questions on some of the things you said. I want to come to Professor Alege. Now, looking at our sort of big macro headlines, we know what the figures are. I mean, everybody here is a street economist. We know where inflation is, 34%. Unemployment, at least recalibrated unemployment, is at about 5%. We know what the MPR is, 26%, and the pass-through to interest rates in the economy. What else? We know where the exchange rate is. Looking at all these macroeconomic figures, we're half year in 2024, we're a little over a year into this administration. Has the government's policies, have the policies been successful in your assessment?
Good morning, Balake. It's an opportunity to see you today. I've been seeing your television.
Could you maybe put the mic closer to you?
Okay. I was saying it's an opportunity to meet her face to face. I've been seeing her on TV. I want to thank Commercio partners for this opportunity. Now, the question you asked me is if you can ask everybody. I think our response will be the same. Now, we all know what the indices are saying. If you combine them, you won't give any government a pass mark. And the truth of the matter is that we need to find a time to tell ourselves the truth. And what is the truth? Basically, we are not a productive economy. That's my understanding. That is, our productive capacity is very low. Thank you, sir. Well, that's why we're here. It's low, so we're managing. And if you look at that, it means we need to do a lot right from the center to get things done. When I say productive capacity, I'm talking about all the sectors of the economy: manufacturing, small-scale industry, agriculture, and so on. Now, the thing that makes, if you want to verify this, just go to market. You are a woman now, go to market, you will see. These days, I used to credit a woman that they are trying you. You can't ask women now that you are pocketing my money. You didn't know, because she has to add more now to meet the demand in the market. Okay, which means from the policy arena, thank God, my brother is here. From the policy arena, we must begin to do the right thing part time. It's good to talk grammar, but at the end of the day, it's the welfare of the people that counts. It's the welfare of the people that counts. Is it because they have weaponized the poverty in Nigeria? That's why everybody is just doing anything. No. We must change that mentality. Macroeconomics, as you see it, is just thinking about a kind of rope, and you see a bird that perches on it. You know, the rope will be moving, the bird will be moving down. That's the macroeconomics for you. There is no time when economy will be stable. Mark me, there's no time. Because what led to an equilibrium, we call it, is the behavior of human beings. And these human beings are not static in their behavior. Yeah, sure. Everybody is changing every time. So you understand me? So, which means the policymakers should be at abreast of what is happening. They must not be too far from us.
Okay. So if I may press you on one of the things you said, you talked about productivity and what has to change at the center. Can you be more specific? So what are the specific policy tools that will catalyze the kind of inclusive economic growth and development that you want to see if what has already been done is not delivering results?
That means I will come back to what you have said. Any policy is either major fiscal, monetary, or trade policies. These are the different ways the government can come. So it's left to government to do a kind of good research to know where Nigeria is going, not political research. That is the research in which the people that sense you will be listening to you. And they will agree with you, and then they will now go back and see whether it conforms with their own expectation. But they have believed that what you brought can improve on the economy.
Sure. Thank you. And I think you actually make a really good point around how inclusive the government may be in feeling the pulse of ordinary Nigerians in terms of how it actually makes policies. And I think we're seeing some of the manifestations in other countries. I mean, we talked about Kenya on the previous panel, but I want to come to you, Mr. Ajiloju. The NESG is the nation's economic think tank, if you like. You've been doing this for many, many years. Maybe not you personally, but at least the organization. What specific advice are you actually giving the government? What are you advocating for as the biggest catalyst for Nigeria's growth now? And growth that is inclusive, that is sustainable, that helps achieve maybe some sort of equilibrium, as Professor Alege has mentioned. And where do you think the government may be getting it wrong, if you're at liberty to say?
Sure, I'm always at liberty to say, but let me begin with maybe the Nigerian Economic Summits Group core theory of change. And it hasn't changed in 3 decades. At the first summit in 1993, we agreed on some fundamentals that, look, if you want to build an open, globally competitive, inclusive, and sustainable Nigerian economy, you at least have to commit to 6 core principles. Principle number 1 is democratic governance as the basis for a modern economy, which speaks to the openness of that economy, the openness, the transparency, and the accountability of that economy to all stakeholders. Now that's crucial, because if you don't have that, you can't do principle 2, which is governance in the national interest. And governance in a national interest means that you select an economic model that drives the aspirations of your people. In other words, you must adopt a sovereign wealth philosophy that allows you to extract, trade, tax, redistribute, and deliver economic value within the economic system to firms, households, and individuals who are typically the actors in an economic system. That requires the rule of law, that people can participate in the economic system, and the sanctity of contracts, the sanctity of lives, the sanctity of livelihoods will be defended within the context of the rule of law. The rule of law is then the basis for creating an environment that is easy to do business. You need the ease of doing business to attract investments, and investments stay only in an environment where the market principles pursue their optimization of value. Now, this is the core theory of change that the NES has pursued. Now, in the 3 decades we've existed, we went from a very close economy under the military till 1999. And under President Obasanjo's 1999 to 2007 reforms, I think the other panel alluded to it, we actually achieved a high growth economy because Nigeria opened up. We pursued privatization, commercialization, infrastructuralization that unlocked value, recapitalized the banking sector. We took the banking sector to 2 waves of capitalization, liberalized key sectors of the economy so capital could come in, and government consistently behaved in line with its policy for 8 straight years. The result was high growth. Okay, the only challenge with that growth at that time was that we macroeconomists noted that the growth lacked depth. It was a jobless growth. Yeah. But we were growing. I mean, from FDI, PFI, to call all the indicators on the macro, we were firing. In fact, when President Obasanjo left office, excess crude account was way above the $60 billion mark. That's money in our current account, not reserves. Now, it meant that there were some choices we made in governance, in the economic model we would run, in the consistency of policy that drove that trajectory. Now, in the second decade of our post or democratic experiment, we then started to pursue a new set of policy objectives that were different from the first decade, right? We decided that saving money wasn't a big idea. We depleted the excess crude account in 1 year. And of the almost $50 billion in excess crude account, we saved only $1 billion in a fund called the Sovereign Wealth Fund. Okay? And you will remember that by 2011, Ngozi Okonjo-Iweala, who was Minister of Finance at that time, declared Nigeria broke. And remember, we occupied Nigeria 2011 December, and this fuel subsidy we're discussing in 2023 was up for discussion in 2011. So we've dealt with this before, and the truth is that fuel subsidy moved from a fiscal savings operation between 1999 and 2010 to a first-line charge on revenue between 2011 and 2015. What happened in 2015 was that crude oil dipped globally, a combination of Iran overproduction and shale oil, and dipped to, I think, about $6 a barrel at one time. The result was that we went into automatic deficit financing. Yeah. And that we sustained deficit financing plus borrowing our way through 2 recessions and 1 pandemic. That brings us straight to 2023, right? Now, in 2023, you're now discussing an unsustainable fiscal balance, assets that have not fired in decades. So if you go to the asset side of our country balance sheet, let's treat Nigeria as a balance sheet. The asset side had not fired in a decade. Our top assets, NMPC, was underperforming. In fact, oil and gas was in recession, right? On the asset side. On your liability side, we didn't even know what the liabilities were. There was lack of fiscal transparency. The amount of forwards, the amount of oil swaps, you and I had a conversation a few years ago, maybe, and we were discussing what is the size of the oil forwards? What's the size of the liabilities? Nobody knew. What's the size of ways and means? Nobody knew. And the fiscalization of monetary policy aided that liability expansion. Now, when you move to the revenue side, oil theft was at its peak. We were discussing 1 million barrels or so of stolen crude. We were declaring production of 1 million barrels a day or less on your top revenue earner. And trade was underperforming. Trade volumes were showing that almost 90% plus of our export revenue was coming from this crude oil that was being stolen. Now, when you move to the expenditure side, there was also expenditure transparency. So whilst debt was growing, how debt was being used to drive development was not being transparent and accountable. This is the balance sheet of the country in 2023. Now, the question then is how...
Where do we go from here?
The question then is, what does a new government do coming in and seeing this balance sheet? You balance the books. First, you have to declare transparency everywhere, on assets, on liabilities, on revenue, on expenditure. And you must start there because, when God wanted to create the earth in Genesis 1, the first thing he says, let there be light. You cannot create, you cannot solve chaos. You can't solve chaos in darkness.
Thank you.
Okay, so transparency first. And the transparency has to be on all sides. Monetary transparency, fiscal transparency, investment, assets, liability, revenue,
Dr.
expenditure.
Atoloju, you painted what I think is a very stark picture. That's about 20 years of economic history, by the way. Doing the calculation, a little over 20 years. You said a lot in there, good context setting, and there are a couple of things I picked up there. You were mentioning your theory of change, and what I'm hearing that there's a fundamental governance issue around Nigeria's economic story today, and I think that's a bit of the elephant in the room. Some would even go as far as saying the social contract between the government and the people has been broken. I heard that. And then the issue of transparency, which is key, which then brings us to the issue of vested interests and what incentive there might be to move in that direction. I think those are two things I really picked up. I'll come back to sort of ask, and I'd like maybe before I come back to you, Mr. Fasua, to give you a heads up around some of the things, I'd like you maybe to address how we then move forward, giving that picture, because you alluded to COVID and all the things that may have set the scene for today. I'd like you to think about that. But I want to come to you, Mr. Oreagba. You work in private markets, in capital markets, and one of the big themes today is attracting investment into Nigeria. Granted that you work in a space where we're talking more about capital inflows, private capital inflows from overseas investors, we know what the pulse of Nigerians is. What are investors really saying about what this government is doing? Because it's easy to read the headlines and think they're all saying it's bad. It's not great. Governance is an issue. Inconsistent policies, double taxation, but what really are they identifying as Nigeria's big issue, if you can give that assessment? And what is the role of capital markets in helping perhaps to rewrite that narrative?
Right. Thank you very much. I came here as a guest this morning, and somewhere along the line, I find myself sitting and being a panelist. I'm not an economist, but I'll try and do my best. So thank you very much. I made a few notes. I'll come around to answer your question. I'll just briefly run through it. We spoke about policy coordination, fiscal policy versus monetary policy. The fiscal policy, as we're all saying, the government is trying to raise as much money via taxes, irrespective, it appears to be irrespective of how that affects the people of the nation. But there's supposed to be a social contract somewhere. So are they taking that into consideration? We'll come around to that. On the other hand, on the monetary policy side, the government's trying to manage inflation, yet some of the key inputs into the calculation of inflation are the cost of fuel, cost of foodstuffs, which are all affected by, foodstuffs are affected by insecurity. So there's a whole lot of moving parts. However, something nobody has mentioned all day today is how we spend money. No matter how much money you raise via taxes, if the basket is leaking, there is no amount of water you're going to put in that basket, it will continue to disappear. So I know we can talk all the fancy stuff, raising money, taxes. We need to address our expenditure situation. And we're talking all the way from the guys in the government, the legislature. My colleague on the right, Tokwe, said that we have a budget of $15 billion a year, which is one of the lowest in the world. But I can tell you this, the cost of governance is one of the highest in the world. So already there is a mismatch. And if there is a social contract between, thank you. If there has to be a social contract, then certain people need to start making some adjustments somewhere along the line. Otherwise, we're never going to get there. We spoke about policymakers being in touch. Well, that goes back to what I've just said. We can talk all we like, but the proof of the pudding is in the eating. My colleague from NESG, in 1999, Nigeria had no external debt. It was wiped off. And over the last 25 years, we've managed to rack up about $60 billion. We've depleted the excess crude account, and now we've got about $60 billion in external debt. God knows how we're going to pay that back. It's our generations to come. So we have some serious inward looking to do. Now, that goes back to the question you just asked me. Everybody, back in the 2008, everybody said Nigeria was going to be one of the big, the next big economies. You had JP Morgan, Goldman Sachs, everybody rushing into Nigeria. We were going to be all good. Now, if you ask those same people, when I was at the stock exchange, I left the stock exchange in 2010, even then we're doing about $70 billion a day turnover on the capital markets, of which 75% of that was foreign investors. Now, the average daily turnover is about $7 million, of which 65 to 70% of that are domestic institutions. The foreigners have run away. Why did they go? Irrespective of how rosy you want to paint the picture, people have said, listen, number one, there's an alternative, less risky environment somewhere. We've been to Nigeria, we've had our fingers burned. Some of us that got in there, we had the non-deliverable forward situation. Nobody knows what happened to that. It was not transparent. It was not there for people to see. Those that managed to get their dollars, get their naira, because even the forwards were not structured properly, because as a hedge for currency, you were getting the profits from your futures was being in naira. So that's supposed to be a hedge, but when you now use that naira you've got from the NDFs to go and buy your dollars to repatriate your money, you can't get the dollars. So it was a trap. And as we all know, airlines, it's only recently they started to clear all these things. So in terms of capital markets, foreign direct investment, etc., a lot of nations have had their fingers burnt. Be it capital markets, and we're talking about earlier on, someone said the all-share index, one of the best indices, best performing indices. Well, my personal view, the all-share index is not a good barometer. Number one, about 80% of those companies don't trade. A lot of those companies don't trade on the stock exchange. The price hasn't moved. Some of them are dormant. So, you could take 15 stocks, of which majority will be banks, then you have maybe an MTN, Dangote, and a few others, and that would replicate the Nigerian the Nigerian capital markets. All share index is of no use to me as far as I'm concerned, because it's not a true reflection. Half of them don't trade, which means when they should be going down, they don't go down anyway. They're just there. So how do we get these funds back into the capital markets? It's all about policies. It's all about liquidities. Nigerians, you talk about people bringing investment into Nigeria. If I'm an investor and I decide to make the plunge to invest in Nigeria, do I go into the equity markets to raise money, or do I go for commercial paper or something that's going to give me 29%? So the debt markets have already crowded out the equity markets anyway, because you can get your treasury bills. Even if you're a retail, you can get 20% on T-bills, which is a government security. Whereas The companies that need this money, these funds, to grow, to develop, to produce, to pay dividends, they can't afford it. And if a company is borrowing at 30% how much are they going to put on the products that are finally produced without driving inflation? It's not possible. So I think we all have to have we have a lot to do in terms of that. How do we get them back? I think, like we said, policies, but we need to get our own house in order first. And in order to do that, we need to cut our expenditure. We probably, in the eyes of many people, because I have to be careful what I say, in the eyes of many institutions, we've run a very bloated government. We run a very overpaid government. We've seen what happened in Kenya recently. We need to make sure that, listen, once people start to believe our story, money will flow. But the problem is, a lot of institutions, a lot of foreign institutions, have been here, seen it, done it, worn the T-shirt, and they're going to take some convincing to come back. So we've got a lot of work to do.
Yeah, indeed. Thank you very much for those views. It also must be said, one of the things that has impacted the inflows is also that Nigeria's, there's no benchmark. So a lot of these investors don't even have an index. Nigeria is not on the Morgan Stanley Emerging Market Index, so there's no reference point. But coming back to government, Mr. Faswa, you've heard a lot. A lot has been said, and hopefully you don't feel too much in the hot seat. But I think, please let's give him a round of applause. I think one of the recurring things I've heard here is around expenditure and cutting back government spending. And sometimes I get the feeling that maybe sometimes the government is putting the cart before the horse, that these policies cannot thrive in the absence of proper governance and tight controls, anti-corruption, and dealing with the loopholes and the leakages, as many people have talked about. So what is the immediate short-term plan around those issues, right? It would be good to hear one or two things. And then maybe you can specifically address what is the fundamental ethos of the government in terms of the policy outlook? He suggested maybe we're now in a balancing stage. Are we really balancing? What is the philosophy of this government insofar as economic policy is concerned?
Thank you very much. And well, I doubt if I'm here representing the old government. I probably can't, because if I was to do that, I would have written a memo to President Bola Tinubu telling him I'm coming to Comercio, and then I'll wait for the approval to come before coming. But Nnamdi is my friend, and I keep my words. So if I told Nnamdi I'm coming, I like a good intellectual debate on economics, then I come. So. That's why I'm here. And secondly, to say that, look, I've been there, done most of the thing, including contesting for presidency, like I said. But mostly all my life I've been a private sector person as well. And I don't think that we in the private sector, we shouldn't engage too much in what I call voyeurism. I mean, you're looking at them, they're missing it. You'd never get involved. Everybody likes to wake up, type a killer tweet, tell them how they're not doing it right. And at the end of the day, look, we're here together. And I still say this, right? Nigeria is the best place for any Nigerian to live in the world. I think you've been abroad. Taya's lived abroad. I did a bit of a stint as well. Farouk doesn't even belong here. We only discovered him during the last Ojide Oba. Nigeria found who was Farouk. So here is still the best place to be. And for one reason, if not one reason alone, apart from the fact that you are here and you're first-class citizen, so long as you're Nigerian. But also because we all have the opportunity to make a difference ourselves. When all the Dangote hula baloo was going on, I had cause to remember this documentary I'd watched, the men who built America. And all of them were crazy monopolists, right? And I said, okay, are you sure, are we still at that stage where you have to be a crazy monopolist who's elbowing everybody out in order to do something big? I mean, the Rockefellers, the Carnegies, and so on, they were loonies, but they brooked no competition whatsoever, So that's very important. Secondly, I was on a program in Harvard Kennedy, some time back, and we had cause to discuss the South African experience. And so I take South Africa and Kenya, but South Africa this time around. The reason why there's a lot of problem in South Africa, bigger than Nigeria, some of them bigger than Nigeria, including the highest inequality in the world, is because by the blacks, they come from where they call homeland. And when they leave those homelands and come into Johannesburg or Pretoria and those developed areas or Cape Town, they can't fit in. They can't get jobs in the banks because they don't have the training. Nigerians go there, Nigerians have considerably more training to get into those places. They can't even do farming. As we have here, smallholder farmers doing something. They don't even have the informal economy. They don't even hustle. I remember going with a British friend of mine to Mina. I had a program to do in Mina, and we went there in the morning. As we were going, I didn't see it. And then Duncan told me, he said, you know what? Your people don't wait for government. Because as we were going into Mina from all the side roads, he was seeing people wheeling their carrots to the road, wheeling their vegetables and so on. He said, wow, you guys don't wait for government to do things. In Britain, where I'm from, government has to solve the problem for us. That's the paradox of what we're living in. Nigeria is unique because of the informal economy. And that's the reason why, to your question and Farouk's comment, when Farouk says we have to cut, expenditure is too high, I say, no, I think it's the quality of the spending that's got a problem. But we don't have enough, nearly enough to spend, like I said earlier on. And this is open to verification. Anybody can Google it. Just Google the budget of even mere Kenya with 50 million or 60 million people. Let's talk of South Africa, doing 140, 150 billion dollars. The budget of Johannesburg alone for 5 million people, okay, is at least $5 billion. And Lagos State can't even manage that. We're talking of 7 trillion or thereabout. Lagos State just managed to cross 2 trillion. You know, the entire budget, all the states are 15 trillion. So look, and I'm saying that we've got even a bigger problem than we. But the problem is indeed an opportunity. Don't cut me short. You give them time. You know, please. You know, so please, it is an opportunity and all of that. You know, so essentially, I discussed the issue of budget, and you know, I was going to also say that look, we should be careful about bringing long-term solutions to short-term problems. And you did ask about what are the short-term solutions. So, for me, it's not very too difficult. We should look at it sectorally. Professor looked at it in some ways. As we are speaking, in spite of all the challenges of the economy, some sectors are making it. The banking sector is making it. That's why they had to go after them with, you know, windfall tax, and it's done everywhere in the world. The petroleum sector is making it, but because of the divestments in our petroleum sector and our non-involvement as a people, fundamentally, that's why we can't go after them. In Britain, they're taxing extra taxes on the petroleum sector. In the US, since 2023, they've been doing that as well. Some sectors are doing incredibly well, including even the agri sector. And I think so, if we want to talk about the ethos of government, I think that fundamentally, and going from the reforms we have done, we want to empower the economy from the ground up. We want more Nigerians to get productive. When you say there's little productivity, and almost everybody has spoken about low productivity here, it is a long-term problem. But we can start now. And that's where the pains come in. When you depreciate the naira to where it is today, you can only be doing one thing, trying to get people to really produce. And just a few days ago, I saw 3-4 Nigerian companies getting involved in AFCFTA. The other time, Innocent sold cars worth 28 billion to Sierra Leone, alone, the government of Sierra Leone, you know, and we're seeing that. In Q1, we had a positive balance of payment of 6.2 trillion naira for the first time ever. In fact, the highest ever. In fact, in some years, we don't even manage that. Okay, so some parts of the economy, they're doing well, entertainment doing well, creative arts is doing well, tech sector is doing well, banking sector is doing well, real estate is doing incredibly well.
Okay,
and we can
you.
do a whole lot more. So I think that the ethos is all about, look, let's address things fundamentally once and for all. It's risky, extremely risky. It needs to be risk managed so that we don't go into the kind of Kenya situation. Thank you.
Okay, thank you very much, Mr. Fasua. I think we've got time for maybe a couple more panel questions, and then we'll open the floor for the audience as well. Professor Alege, you've heard Mr. Fasua as the Special Advisor to the President of Economic Affairs talk. Based on his assessment of the sectors that are doing well, and based on his assessment that it's actually a problem of not enough cash, we don't have a big budget versus the expenditure issue, what specific policies do you think for the next half of the year this government should focus on? What are the specific areas the government should, and I want to bring in two additional dimensions. Nigeria is still one of the countries with the largest number of multidimensionally poor. And whilst we're seeing these sectors boom, the question is this growth in these sectors, is it inclusive? The second thing I would also like to introduce is the purchasing power of the ordinary Nigerian and effect of inflation in terms of erosion and household savings, etc. If we are not able to build up the bottom of the pyramid, who are the consumers that are going to be spending on the goods and services that these big companies are going to be producing? So I'd like to hear your thoughts on that. Thank you.
Okay, thank you. I want to say that in an economy, everything is in everything. You understand me? Everything is in everything. Now, once you touch one aspect, every other thing moves. For instance, what happened when the president announced, although we knew before, but when he announced end of subsidy, before evening, Nigerians are already there, increasing price of fuel, everything going up. Before you know it, the prices of goods and services has gone up. Before you know it, people are clamoring for increase in salary. Before you know it, husband and wife are divorcing themselves. Now, that's why, but that's the reality now. That is why I find it very difficult to be doing as if I'm talking about Chelsea and, because like I was saying before, we live in a system of human beings in which your behavior, I cannot predict. And that's why in modern day analysis of macroeconomics, there is what we call uncertainties. Uncertainties. Those are things that you never planned for. You don't expect, it just came. Number one that everybody knew was COVID-19. Look at what it did to us. I think you mentioned it, or somebody else in the first something, that, it constrained movement of human beings. That means there is no human being if there is no other person, because we have to interact. So you see, that thing, you remember again this, which one now? Russian-Ukraine war. Nobody knew it was coming until February 24 when I woke up and heard. Before you know it, my people in the village, they are praying for it. Yes, now, because that is when the price of bread became higher. So if I'm going home with one loaf, I can't go with one loaf again. Either I tell them, oh, I didn't pass there.
I think, Professor, so because of time, I want to speak to you, but I think what you're referring to is the uncertainties, the global uncertainties, interdependencies that impact Nigeria.
What I'm saying there, briefly, is that we need to encourage ourselves. Okay, first of all, we know about this. We need to encourage ourselves to put more money in research, including the finance people who they said are doing well. Abi? And I know you are doing well. So that anything we are going to do, let there be a background research.
Understood.
That everybody can, and these are those who will look at uncertainties.
Sure.
Which you call scenarios sometimes.
Sure. Thank you.
So that the policy we are suggesting will actually match our expectations.
Absolutely. Thank you. I think the things I take away from that is understanding the complexities and dependencies of Nigeria with the rest of the world and how it impacts us, but also the importance of planning.
Sure.
For uncertain scenarios. So you talked about COVID. Businesses have to do continuity planning and understanding the issues. So good point. So I was going to say Dr. Ajuloju. Are you a doctor? Philosophy? No.
Yes.
Yes. So I was going to ask you around some of the things have been said. His argument and position, that's Mr. Fasoa, around what Nigeria's major challenges and the optimism around specific sectors. Maybe you could address that. Are those things that have organically happened or have been triggered by particular policy instruments? What is your view on those?
So let me stick to my country balance sheet metaphor. It's just for the sake of explanation. Now, this government has a policy for our assets to fire, right? And what I mean is that by simply moving our assets, NNPC, rail, ports, from lower levels of productivity to higher levels of productivity, we will become more productive as a country. But for that to happen, you must almost go through the fiscalization of our assets, get them ready for investors. It's taking too much time. Nigeria, in its infrastructure master plan, has 75% of its infrastructure as bankable infrastructure that can attract FDI. Here's the problem. Most of that infrastructure is constrained by regulatory, legal, and policy bottlenecks. We need to unlock that. There is a 3.7 trillion opportunity just in that. Now, if you and I had a father who died and left us $3 trillion worth of assets and a loan of $60 billion, sis, we'll pay now. That's the idea, but the idea isn't working because most of our assets are also heavily politicized. So you must fix the asset side. And Nigeria needs an asset fiscalization strategy. The Ministry of Finance Incorporated unveiled something earlier in the year, Murphy, and we were ready to go, but we've not heard anything. There's not enough political authorization on the asset class in Nigeria to fire. And by the way, it's some of those assets that should find their way into the financial markets. If you really want to change the game, bring ports, bring the port infrastructure, bring rail infrastructure, bring NNPC, bring all these things into the capital markets and see whether the appetite and the scale of transactions and the optimism will not grow, and get out of the way. Government needs to know when it's markets that need to work. Now, on the liability side, I agree completely with my brother. Look, the liability side is too small, but here's the thing. You need to transform finance. Some of the finance we're using to chase infrastructure is the wrong type. Some of our infrastructure requires private sector investments, not government budgeting. We need to become better at deciding the blend of finance that drives infrastructure development in Nigeria. At the current rate of financing, right, it will take us 300 years to build a modern infrastructure for Nigeria. Look how long it took us to finance Lagos Ibadan. Okay, and by the time we are halfway through the project, the other half are spoiled. So we need to tweak the model on financing Nigeria. And financing Nigeria is not one thing, it's a combination of transforming credit for smallholder farmers. Look, we've gone through 6 MFI reforms in 20 years. And still, microfinance doesn't work at scale. That's why Anchor Borrower had to step in, because microfinance of smallholder farmers did not fire. We have not transformed pensions, really, because we have not securitized a way pension can go into bigger infrastructure and finance, and that's because asset fiscalization has not happened. That must happen. Then you then shift to how we borrow. We need a borrowing plan. You can't run a country without a clear borrowing plan that gives you line of sight to liquidity. The point that was made in the earlier panel, we need to know how the next $100 billion will arrive in Nigeria. How much of it is being chased as FDI? How much of it is coming as FPIs? How much of it is coming as loans? What type of loans? And it's this type of loans that starts your advocacy as a country. Somebody asked in the other panel what role we will play in convening Africa. If Nigeria is smart, right? IDA 21 is on. IDA 21 is really the stack of the next low concessionary credit from the developed countries to developing countries. And for now, the mobilization is very low. Country like Nigeria, where we should flex our diplomacy, is making sure we are out there mobilizing for IDA 21, knowing that that's more of the kind of money that we need. Diplomacy is when Nigeria says there's $181 billion between multilateral development banks on the continent. This is not, this is outside of your World Bank. I'm talking of your African Development, your Afro-Exim, etc. And say that $181 billion, we as Nigeria, we calibrated to bring about 20 billion home. Then we begin to discuss a borrowing plan.
Okay.
Lastly, we need to discuss an investment plan. The president has the ambition to go around the world to ask investors to come here. But investors coming here needs a plan. What will they invest in? Which sectors will be de-risked to be ready for those investments? How will we onboard them with the lowest level of friction and risk? How do we keep our investors here for longer? How do we onboard investment, and then how do we incentivize reinvestment at higher scale? Right? If you are chasing away the investors that are already here, okay, if you're telling them they can go, it doesn't matter. You are disincentivizing those that need to come, okay? Because look, the hardest thing to do is to uproot a factory from the country you're in. People don't realize how hard that is. For you to make a decision that you put $100 billion here and you're willing to exit at $50 billion. Right, at $50 billion. It's not a bet on today. No, it's that that entity has looked at your future and has now not placed the bet on your future. I've sat with almost 100 manufacturing companies since January.
Very quickly.
Let me close with this. And what I've heard from all of them is, tell us it will be okay. Show us a plan, a well-sequenced, well-bundled, well-timed set of reforms that give us and our investing bosses in our HQ a sense of forward guidance with predictability and relative stability, and we'll stick it with you for the longer. That's the message we've heard.
Thank you. Very, very well said. There's a lot to unpack there, but you'll have the final say for the panel round. I just wanted to throw a point he made around long-term financing, especially of things like infrastructure, maybe the role of pension funds and local capital markets, and Nigeria being able to leverage its assets. Essentially, what he's saying is that there's enough money, residual value that's lying in this economy that hasn't been tapped yet. That's in the first part of your submission. So perhaps, Mr. Oreagba, you can address some of those things from your perspective, and maybe we can already start to get a few questions, because we'll come to the panel now. Thank you, to the audience.
Thank you very much. There was an issue about policies, and one of the things that I always say is we do a lot of audio and audio policies. We don't need to rush these things. For example, we've spoken about the windfall tax on the foreign exchange profits of banks. Well, guess what? Those profits are unrealized profits. So you want to tax a bank on profits that is yet to realize. It is yet to realize. Yet the banks are also expected to fund economic growth because we have a target of where we want the economy to be by 2030. Somehow that is not going to work, especially at a time when the central bank has turned around and says banks need to raise more capital so they can be much more resilient to take some of the external shocks that will help drive this economy. Somehow along the line, I don't think someone's thought that policy through. So was it done for optics? I'm not going to go into the politics of it, but when you start having those kind of discussions and concerns about policies which probably were made in good faith, those do not give the kind of confidence that your people talk about, that we know where the path is going and we know where we're going to be in 20 years. Because for some reason, some people may think, they're going to change that policy again. Let us wait. We'll hold on to our capital. So those are one of the things. Like I said, banks are not necessarily lending to the growth sectors. Why? Because I suppose maybe they are focused on other areas, or it's a policy thing or lack of regulation. We need to look at that. Now, talking about organic growth on a lighter note, I mean, a month ago I was nobody. Now I've got so many followers on social media. Now I know certain people go around paying media teams to follow them. Mine is organic. I didn't look for it, it's organic. Now, I just had to throw that one in there, thanks. Now, you mentioned Mofi. Mofi, I think last year went on a major drive to actually create a register of Nigerian assets. Without going into too much detail, I remember about 8 years ago, I was running a bank in South Africa. I looked at, I'm going to put it out there was a sugar company, a national sugar company in Southern Africa. And a private investor was looking at this. And I went through the register and I found out that the Nigerian government owned 10% of that. And I called the Minister of Finance at the time, I won't mention her name, but you don't need to be a rocket scientist. And I said, sis, do you know you people own this? I said, back there, don't just leave that matter there. So Mofi, I don't know what's happened to the dividends from that company. I don't know whether it's on a register or not. But going back to the transparency, we need to have transparency, a true picture of what we own, what we don't own. And if it's a company that's paying dividends, we need to have that transparency all the way through. So now I talked about regulatory bottlenecks. Go look at Dangote and what's going on. That does not help anybody who's going to come and invest in Nigeria to say, hang on a minute, because they can switch it on you. And as long as there's that doubt, a foreigner, especially when the foreigner has alternative places to invest their money, they're going to be hard pushed to come and put their money here. So we need to look at how, we don't just do things for optics. It sounds good, let's just talk anyhow. Think about it, because there are people who would listen to what we say, and there are consequences for every time we double back on what we said before. People are not going to believe us. So, like you said, you also mentioned something about the borrowing plan that gives you a line of sight to liquidity. Very, very important, because then people can plan, investors can plan. These are all the things that we look at that will hopefully attract foreign capital, or any capital, because we always talk about foreign capital. There's another form of capital that is, there's local capital that is being changed into dollars on a daily basis and going out. It's not just bringing in foreign capital. It's trying to stem the outflow of local capital, because in a way, that outflow puts a lot of pressure on our currency because the locals are changing money. So bottom line is, will the policies change? We've got to make sure that whatever policies we bring out, good, bad, well, hopefully not bad, they're thought through and we can stick to them and not just, flip on a coin. In terms of long-term financing, just one last thing, debt seems to be the thing at the moment. There is an opportunity, this is very close to my heart, whereby we're looking to create new asset classes. We were speaking about that earlier on. We're speaking to the minister, we're trying to create an asset class where, for commodities, hopefully, we met the minister, we're talking about creating a commodity asset class, and all of a sudden, all kinds of things come up. Security, creating a security corridor, creating warehousing, aggregators, quality control. There's a lot of work to be done. But I'm going on a limb and say this, even without the results now, if the investors can see that the government and the policymakers are sincere and are going to stick to their word, and it's going to take some time because we've been known to double back in the past, but there is hope for us. I mean, we're all here for a reason. I mean, we could all be everywhere else. So Nigerians need to be able to the government has to be a little bit more accountable, stick to their policies, think them through before they make the utterances, and hopefully that will create a viable environment that will attract capital and, most importantly, retain capital. Thank you.
And thanks for ending on an optimistic note on the panel. I know our panelists have a lot more to say, so maybe you can add additional submissions when we get questions. I'm going to take a maximum of 3 very short and brief questions. So I see a hand there. Oh, you had a question in the first session, so can we have somebody who hasn't? Yes, so the gentleman in the black suit here, please, and then I'll come to you. Yeah. Maybe we can get a mic.
All right, thank you very much. Good afternoon, and thank you very much to all the panelists. Very insightful and educative, as it were, discussion. All right, so I have 2 questions. My name is Babatunde. My first one is, and I've asked this around during the tea break. I felt now we have some people with insider information, kind of, to give some kind of perspective to it. Number one is, what is the direction of the fiscal policies of this government? Is it just to raise money anywhere money can be found, or to drive local manufacturing, to drive exports? What is the direction? What path are we facing? Number 2 is, and this is to Mr. Tope. Looking back in retrospect, would you say that the policy of floating the currency alongside removal of the subsidy was too much iron in the fire? Could it have been spaced out before being implemented? Because to me, now this is my own personal comment, to me it looks like the floating of the naira is a policy somersault to the removal of subsidy. We're trying to do good thing with the right hand, and we are putting a negative operation with the left hand. Thank you very much.
Thank you. We'll take the 2 more questions before we come to the panel. Yes, this gentleman here. Can you pass the mic?
Good afternoon, everybody. Good afternoon, panelists. Good afternoon, gentlemen and ladies. My name is Dr. Deji Bolusemihi. I'm happy to meet you, Steez. I'm a risk management specialist. So I'm going to be asking my questions from my professional point of view. We are talking about macroeconomic outlook. We're talking about FDIs and so on and so forth. But I'm worried. I was at dinner yesterday with Dr. Tope Faswa, and over dinner, I told him some of my worries. Some of my worries is that we can't be talking about attracting foreign FDI. We can't be talking about economic growth when we don't have a conducive environment. And the conducive environment risks, we have a lot of security risks. We have terrorism, insurgency, kidnapping, violent crime. And there's something I call Nigeria bouquet when it comes to risk management. That is very peculiar to Nigeria. And that is ethnicity, religion, and political risk. It's a bouquet. It is existing in this room, even as we speak. So if I'm a FDI, I want to come and invest in a country, you are asking me to come to a country where I know, I'm very much aware from my background check that these risks exist and they are inherent. Will I come? Thank you.
Thank you very much. One more final question, please.
Hi, hello. My name is Nii Momo. So my question is very brief, so I think you probably can still take another question. Hi, Tokwe. I mean, I've listened to you, and when I leave here, I'm going to go on YouTube and search your name because, I mean, it's been very insightful, right? And Tayo, same thing as well. You guys, Tayo especially, you have a lot of answers, right? You guys are policy think tanks to the government. And Tokwe, you've identified a lot of the problems. So, here's it to the president, CEO of the policy think tank. How often do you guys talk? How often do you guys talk? And is it that the government, is it that they are not answering? Because some of those things, right? I mean, it's not easy. And to be honest, I'm on Tokwe's side. It's very, very difficult. Me personally, I'm not very, very optimistic. I believe we have to strap, what's it called, our jackets. It's not going to be easy. I mean, it's not going to be bed of roses. It's going to be tough, right? So, if you're asking us to face the austerity, because if I have kids, which I don't, but if I have a bunch of kids and I take them out of, say, Covenant University to a state university, I won't go back home tomorrow with a brand new Range Rover. It's not possible, right? They'll look at me like, are you silly, daddy? So, if you're asking investors to invest, and you go into meetings with $250,000 watches, I mean, the investor is going to ask, is my money going to be channeled to the right direction, right? So, how often are you guys talking? So I think you can still take maybe one more question. So it's very, thank you.
Okay, thank you. I'll allow the lady in blue, sorry. Moderator's prerogative. Thank you.
Hello, good afternoon, everyone. My name is Henrietta. So, I don't know if this is a question, but I'm just going to ask anyways. If I have $1 for every time I've heard we're an economy of over 200 million people, I mean, I'll be rich in dollars, but are we overestimating our, there's a pidgin language where you say like, I get them before, no be property. So are you overestimating yourself, when you say that you have 250 million people and that should, drive investors into your economy?
Thank you very much. Thank you to the floor for the questions. So, although quite a lot of questions were directed at Mr. Fasua, I think maybe the other panelists can also come in where they see fit, but just a roll call. The first question was around what exactly is the direction on the government's fiscal policies? From the same person, could the floating currency plan have been phased? Then we had a question around risk, the Nigerian bouquet. How do we actually deal with these things if we're trying to attract investment, kidnapping, terrorism, etc.? Then I believe it was Nii that asked the question around communication between think tanks and the government, and also leadership and government setting an example in terms of frugality. Then we had Henrietta asking about whether having a huge consumer market, in a sense, is enough to attract investments. So I'd like Mr. Fasua perhaps to start, and the others can follow suit.
So very quickly, let me start from the last one. I sitting here, I'm a symbol of frugality, I must say, I try. Decidedly, I don't have any official car. I use my cars. I should have maybe at least one SS guy following me everywhere I go. I escape from him. I say, go back to your office. I think, like I admitted, and it's just pure common sense. Optics matter. I mean, if it was about cars, because I was in the banking industry, I've had a Prado since year 2020, so it's not one of the things I am looking into government to go and do. That's that. And I also would talk about the lady that spoke about data. I think that question is about data, as in oh, do you really have 200 million people and all of that? I think that in spite of ourselves, our data will get cleaner and cleaner as we go along. Sometimes I've even written to the effect in the past that I don't think we're up to 200 million people. If the people that voted in the last election was 23 million people, and this was a very keenly contested election, 23 million people voted. As a matter of fact, in the year 1993, we had more people voting in Nigeria than voted in 2023. It must be that my conclusion that maybe technology is actually cleaning our data for us. It's getting harder to even rig elections. If it was that, or just to sit in your house and write it, so I think we'll get there. And
Sorry to interrupt you, but if I got the principle behind that question, it was tied to attracting investment, right? So it was whether the population, the fact that people talk about biggest market, biggest population, whether that is enough of an incentive for investors to come
exactly, and I think that's what I addressed really, because I said the data, and I'm not even thinking about population alone, all through, including inflation and every other thing that we calculate, is getting better as a result of adoption of more technology, So including the fact that are we 200 million, are people going to come here on the basis of 200 million? Or even perhaps more importantly, are we supposed to be here just as a consumer economy, sitting down waiting for people to come and target our population? And you can see there was supposed to be a question about companies leaving Nigeria. Even though I also would tell people who ask that question to say, also give me the data on new companies that have been created. The work of industry is even changing, So, but we talk about Diageo and GSK and all of that who have left. Part of the reason that they left is because of their own internal policies and sometimes their internal mistakes. If you read Baba Shegun, he gave an interview on that, and he's quite experienced. But part of it is also because the purchasing power of the average Nigerian has reduced. So they have to leave. So that number is not particularly, a plus. And I get that bit as well. On transparency, I think that, it's also a function of the populace. The data, most information from government leaks out. And even the government knows. So there's fewer and fewer, hiding places, as it were. When we were talking about capital, nobody spoke about human capital. Even if we were 50 million people or 100 million people in Nigeria or 200 million, I think the most important capital is that human capital, which needs to be spoken about. So beyond going all over the world looking for money and all of that, some of the companies that young boys like Mark Zuckerberg and co created, some of them are worth $3 trillion now, which is, times 8 or times 6 or more, even more, times 8, times 12 Nigeria's economy. So human capital needs to be a focus. The future is ours to create, I must say. The reason why we have these small budgets is because we have a huge, huge informal economy. Nigeria is actually more prosperous than most African economies, that even the ones that I said their budget is bigger than ours. But we are still informal. People don't give their data easily. People don't want to tell government what they're doing, how much they have. People are still hiding money in different places. That's part of the reason why we have this. On the issue of insecurity, Mr. Deji, there are different ways of looking at it. 25,000 people get killed in the US by gun crime every year alone. That is even much more than the number of people that Boko Haram has killed in Nigeria. But we will go to the US tomorrow. Anybody that gave a visa here is gone. Tomorrow, and we don't think about that you can be watching a cinema and somebody walks in and shoots 50 people dead. Still, how come? We should ask ourselves. So I think we're not managing our PR well, and there's too much of pessimism among Nigerians. When I look at the faces here, I see young people. Any of you will match anybody from the US or anybody from the UK, from anywhere in the world tomorrow, right now. Don't give up on your country. I was in Covenant University, Professor Lege was there, and Namdi was there. And almost everybody in the class of economics 400 level, I asked them, how many of you want to jackpot from Nigeria? Everybody wants to go. I said, you know what, as you are going, also remember on the flight, that as you are going, the Indians are coming, the Chinese are coming. There must be something about your country they've seen. Again, no matter how you do, one of the advantages of being here at this time is because you've been given an assignment to make your impact and to change your country. It's never easy. Even when you go out there, sometimes they're going to tell you, go back to your country and fix it, because we fixed our own.
Thank you. Thank you very much. Maybe 2 more submissions from the panel. I don't know who'd like to go.
Okay.
Mr. Oregba.
Right, quick one, just run through. What's the direction of fiscal policies? Some people might say anyhowness, but my view is it seems to be focused purely on revenue, revenue, revenue. I was on TV not too long ago and I talked about the whole tax collection policy. I'll give you a perfect example. I'm a salary earner, I pay my tax, I'm PAYE, I've been riding a horse for 15 years, I ride today, all of a sudden LIRS is doing a special audit tax on me. It's not a problem, but the fact I want to make is, the point I'm trying to make is, there's a whole lot of people, just as you just mentioned, informal economy that is not being taxed. Meanwhile, the few that are paying their taxes, you want to kill them with taxes. They need to sort that out. That talks about policies. Would you say that floating the naira, the currency, while removing subsidy is a good thing? Well, to be honest with you, I think we were sold the dummy that there was going to be, we were sold a dummy about the whole issue about removing subsidy, because as we know, the subsidy is back. So we go back to the whole story I mentioned earlier on about audio policies, saying stuff for the fact that it sounds nice. People look at the execution. We need to talk about that. Now, can't talk about, we talked about security for you, sir. Security, violent crimes, religion. Government policies and actions can help deal with this. And why do I say that? Investors are not necessarily, if you want to attract money, it's not necessarily about the situation we have now. It is the policies and the roadmap that you have going forward that will allow you to assess and quantify the risk. You're a risk management person. You said that earlier on as well. So it's not about, okay, we know we've got security issues. It is what we're doing, what is the roadmap, so that as an investor, I can say, year one is going to be tough. By year two, we would have established security corridors for food, for agriculture, for this, for that. It's the policies. It's only when you have a roadmap that investors can assess and quantify the risk involved and make an informed decision. So there is hope there, but provided they have. Quick one, this is on a lighter note. On the issue about watches, example, 2008, US Fed, when the US banks were going to ask for bailout loans. I don't know if you recall, the first meeting they had, literally every US banker came in on a private jet. The Fed, they got to the Fed turned around and said, you people that are coming in a private jet, you don't need money. Reschedule it, go check the internet. They rescheduled it for the previous week. Everybody went commercial. Unfortunately, we haven't really bought into that over here. We will go in with the biggest entourage everywhere. It's optics, and we wonder why people don't take us seriously sometimes, because we don't portray like we are serious about some of the things that we're looking to do.
Thank you.
Thank you very much.
Thank you very much. Great. So I don't know if there are any final comments from Professor
Maybe something
Alighieri.
on sovereign risk. When you discuss your, what did you call it, your Nigerian bouquet of risks, it still fits within sovereign risk. Unfortunately, sovereign risk governance in Nigeria has been very poor for many years. The Ways and Means was an example of failed sovereign risk, unaccounted for oil forwards that shocked us when they were finally announced was, all these are marks. How we are managing our crude oil revenue shows sovereign risk problems. So I think for you risk practitioners in Nigeria, there's a whole sovereign risk governance requirement that needs hard work. Then my sister, there's a difference between population and human capital. They are not the same. 200 million people is population. Human capital is what you transform the population into, and you measure it by their productivity. Okay, when you check GDP per capita, you can tell where your human capital really is. So the real mark is not whether you have 200 million people or what's the GDP per capita. It tells you automatically whether your human capital is firing. So what I will say is that we have demographic opportunities that needs to be translated to demographic dividends, and that has not yet happened. It requires hard work. Thank you.
Yeah, Professor Alighieri.
Just briefly, I just want to emphasize the need for confidence in our policymakers. And that does play with what Dr. Baswa said about himself and the government is participating. There is no economic policy that can work without confidence in those people. Because immediately they announce the policy and you don't agree, you begin to take different actions to counteract what they are talking about. It's what we call self-fulfilling prophecies. So if Nigeria can give opportunity to government, it will work. Because if you give policy, they say they want to do this, and we all agree with them. If at the end of the period they gave, it doesn't result, then we have reasons to say, sir, that thing didn't work. But just announcing it, everybody is saying it will not work. It will help
So
no
Nigerians
government.
need to be patient. And positive. And positive.
And positive.
And there's another really important point I think I would add, thinking about, I use the Supreme Court ruling on the local government and state government revenue allocations of fact. The fact is there are a lot of things that need to happen at the legislative and governance level that actually change the way we do government. Because those in themselves are the catalysts for the reforms that we want to see. And I know the NESG does have a legislative, I think you have a center, that looks at that. So I think the importance of governance and what the legislature does at the policy level also cannot be overlooked. But I think those are very valid
Just
points.
let me explain a little bit more. The macroeconomics is not like a bicycle. A bicycle, I can be going, oh, that's, I thought. I got it, I thought. Economy is not like that. Once you make a mistake, before you recover, it will take you years.
Yes.
The fact that we didn't respect the structural adjustment program in the 1980s, adopted in the 1990s, that is why we find ourselves here. Economics is not like you are riding bicycle. So there is always a time to be given for any policy to work, whether negatively or positively. That's my opinion.
Sorry, Prof, I agree with you, but I think here is where the citizens, we must calibrate for the citizens.
Okay.
Between the ethos of a reform, I want to do this, support me, and the way the reformers act.
Exactly.
There has to be an alignment between logos, which is you announce a good policy, you communicate it well, you get everybody rallied to do it, and the pathos of a policy. The pathos of a policy is the reformers continuously act in a way that makes the people feel. My leaders feel what I feel.
Exactly.
Then there's the ethos of the policy that you watch the leader's character, their behavior, the way they are executing the policy, how they are responding to you from day to day. And there is the ethics, the character, the integrity, the consistency, the reliability, the accountability shows they can trust you.
Sure.
We must find leadership alignment in reform on reform logos, how we communicate, the clarity of the message, the confidence with which to communicate the message. Absolutely. We must have reform pathos. In other words, our reforms must have a sense of having listened to our people. That's the whole Kenyan thing we discussed this morning. Then we must have reform ethos. Our people must watch us and see this man is in front, leading by example, modeling what the reform is. If we have these three layers, trust me, Nigerians will follow their leaders and cross the Red Sea.
Thank you. And on that Aristotelian note, there have been some really fantastic analogies on this panel, from the bicycle to the Aristotle's philosophies. Thank you. This has been such a great panel. Mr. Farouk Oriagba, Mr. Tokwe Fasua, Professor Alege, and Mr. Tayo Adeloju on the Nigerian economy. It's been a pleasure. Thank you very much. Thank you.
Okay. No, no. Okay. We need to quickly have a closing remark, please. Yes. Can we? No, tissue. Closing remark. Okay, so very quickly, I'd like to introduce. I'd like to introduce Kenneth Bry. He's the head of asset management, commercial partners. He'll be giving us the closing remark.
Okay, thank you very much. Good afternoon, everyone. So, like we started the event with an opening remark, it's also good we wrap it up. So, first of all, I would like to say on behalf of the team at Commercial Partners, thank you very much for coming. First of all, to the panelists, we have had a wonderful and robust discussion this afternoon. And all through the session, talking about different themes, how we hope we'll see the economic landscape in the coming months. So first, I would say thank you very much to the panelists, to the speakers we had, Ifeanyi from Dr. Imba from the research team. I think his team, they prepared a wonderful presentation. And please, you can put a round of applause for them. So we had two panels, a robust one on the global economy, how the macroeconomic dynamics in the world will shape the trajectory for the economy. That was a wonderful session. I want to say if we can put our hands together for those panelists. Then to the second panelist, I think it was a very good discussion in Nigeria, a very frank one. We had two sides, one on how we can chart the dynamics for Nigeria, how in the coming months the macroeconomic situation will shape out. So I think that was important. So if you can extend a round of applause to that panelist as well. Then I would say to the participants in the room, your contribution, your engagement was wonderful. We had a robust discussion. People were excited. And if I read the smiles in the room, I would say we enjoyed ourselves. Okay. I know a lot of people are already leaving the room, so I will not take much of your time. Some few highlights which we remember. We talked about how the US Fed, their policy decisions in the coming months will shape the economy of sub-Saharan Africa and emerging countries alike, and how this will help us solve the problem of inflation. We did talk about that. On the Nigerian front, we also talked about the need for policy coordination. We talked about inflation. These are some of the very important things which we talked about. Then we had the poll at the start of the day, and I would say there are a lot of us who are really looking at the crystal ball because the results on that poll, first of all, the first question was, what do you think the MPC's decision on rates will be? And I can tell you that the hawks have it. 52 people voted to see increase in rates. 23 felt that the MPC will hold rates steady, while 4 thought that rates were going to drop. And I can tell you that some minutes ago, the MPC just announced that it was increasing the monetary policy rate by 50 bips. So I can say that our crystal ball is working very well. Then the second question we looked at was on the Naira. Your thoughts about the Naira. A lot of us, some of us were bullish in the room. We see Naira between 1,000 and 1,300. 11 people voted for that. While for some saw, 26 people saw between 1,800 to 2,000, and 3 saw that the Naira could get above 2,000 levels. While the winner for today, it's the group that saw Naira hovering around 1,400 to 1,700. So please give yourself a round of applause. So to wrap up, also, I would say we had a lot of insights from our discussion today. And I would like to encourage everyone here that we should not just go home and forget about all these insights. I feel we should come up together, we should come up with a game plan on which will guide our business decisions going forward, which will also guide our investing going forward. I was so elated when I saw someone in the room talking about problems which he was facing regarding FX and wanted guidance. So we at Commercial Partners, we are here to guide you. We are here to help you strategize. Then lastly, on the materials for the presentation and the video from this event, that will be sent to your email. So before we say the final goodbyes, thank you very much again for coming, and please do have a great afternoon. Thank you.
Thank you for rounding that up. Thank you. We are musical.
Them say, the blessing where you do, Ojo. Them say, salvation where you do, Ojo. You bless the boy, you give him victory, Ojo. The girl is fine, fresh and beautiful, Ojo. See, this Ojo, you do for me good, oh. Sugar, sweetie sugar, honey, the melody like honey.